From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So, for example, we are seeing earlier this year the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. from fish and sea caterpillars on their armor blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
take questions. AP, Zeke Miller.
Afghanistan, but you also promised not to help to bring out those who helped America in its war effort. We've seen these heart-wrenching images at the Kabul airport of people trying to get there, say nothing of the people who can't get to that airport. You made the commitment to get American troops out, to get American citizens out. Will you make the same commitment to those who assisted in the American war effort over the last 20 years, number one? And then number two, what is your message to America's partners around the world who have criticized not the withdrawal, but the conduct of that withdrawal and made them question America's credibility on the world stage?
I have seen no question of our credibility from our allies around the world. I've spoken with our NATO allies. We've spoken with NATO allies, the Secretary of State. Our National Security Advisor has been in contact with his counterparts throughout the world and our allies, as has the General, I keep calling him a General, but my Secretary of Defense. The fact of the matter is, I have not seen that. As a matter of fact, the exact opposite I've gotten. The exact opposite thing is we're acting with dispatch. We're acting, committing to what we said we would do. Look, let's put this thing in perspective here. What interest do we have in Afghanistan at this point with al-Qaeda gone? We went to Afghanistan for the express purpose of getting rid of al-Qaeda in Afghanistan, as well as getting Osama bin Laden. And we did. Just imagine if that attack, if bin Laden had decided with al-Qaeda to launch an attack from Yemen, would we ever gone to Afghanistan? Would there ever be any reason we'd be in Afghanistan? Controlled by the Taliban? What is the national interest of the United States in that circumstance? We went and did the mission. You've known my position for a long, long time. It's time to end this war. The estimates of the cost of this war over the last 20 years range from a minimum $1 trillion to a think tank at one of the universities saying $2 trillion. That's somewhere between $150 million a day and $300 million a day. The threat from terrorism has metastasized. There's a greater danger from ISIS and al-Qaeda and all these affiliates in other countries by far than there is from Afghanistan. And we're going to retain an over-the-horizon capability that if they were to come back to be able to take them out, surgically move. So this is where we should be. This is about America leading the world. And all our allies have agreed with that. And by the way, before I made this decision, I was at the G7, as well as met with our NATO partners. And I told them all, every one of them knew and agreed with the decision I made to jointly end our involvement in Afghanistan. The first part of your question was, I can't remember now.
Would you commit to the same commitment? Would you make the same commitment to bring out Afghans who assisted in the war effort?
Yes, we're making the same commitment. There's no one more important than bringing American citizens out. I acknowledge that. But they're equally important almost is all those SIVs, we call them, who in fact helped us. They were translators. They went into battle with us. They were part of the operation. As well as we're also trying to get out as many NGOs, non-government organizations, women's organizations, et cetera. We're doing all we can. In the meantime, Secretary Blinken and I am going to be working with our allies to see to it that we can bring international pressure on the Taliban they're looking to gain some legitimacy. They're going to have to figure out how they're going to maintain that country. And there's going to be harsh conditions, strong conditions we're going to apply, and it will depend on whether they get help based on whether or not how and well they treat women and girls, how they treat their citizens. So this is just beginning in that score.
Stay past the 31st to make that happen, to bring all the Americans out, to bring those SIVs out?
I think we can get it done by then, but we're going to make that judgment as we go. Now, Justin Sink of Bloomberg.
Thank you, Mr. President. You just said that you would keep a laser focus on counterterrorism efforts and that you don't see as great of a threat of terrorism from Afghanistan as other parts of the world. But if you and your administration so badly misassessed how quickly the Taliban would sweep through Afghanistan, and we no longer have an embassy there from which to run intelligence operations, how can you at all be confident of your assessment of the risk of terrorism and the ability of the U.S. to conduct over-the-horizon missions to keep it in check? Can you tell Americans that they're safe and will remain safe from terror attacks in Afghanistan?
I think you're comparing apples and oranges. One question was whether or not the Afghan forces we trained up would stay and fight in their own civil war they had going on. No one, I shouldn't say no one, the consensus was that it was highly unlikely that in 11 days they'd collapse and fall and the leader of Afghanistan would flee the country. That's a very different question than whether or not there is the ability to observe whether or not large groups of terrorists begin to accumulate in a particular area in Afghanistan to plot against the United States of America. That's why we retained an over-the-horizon capability to go in and do something about that if that occurs. But in the meantime, we know what's happened around the world. We know what's happening in terms of what's going on in other countries where there is a significant rise of terrorist organizations in the Middle East, in East Africa, and other places. And so the bottom line is we're dealing with those terrorist threats from other parts of the world and failed states without permanent military presence there. We have to do the same in Afghanistan.
Sir, just on that initial assessment, we learned over the last 24 hours that there was a dissent cable from the State Department.
Sure.
Saying that the Taliban would come faster through Afghanistan. Can you say why, after that cable was issued, the U.S. didn't do more to get Americans out?
All kinds of cables, all kinds of advice. If you notice, it ranged from this group saying that they didn't say it'd fall when it would fall, when it did fall, but saying that it would fall, to others saying it wouldn't happen for a long time and they'd be able to sustain themselves through the end of the year. I made the decision. The buck stops with me. I took the consensus opinion. The consensus opinion was that, in fact, it would not occur if it occurred until later in the year. So it was my decision. Now, my next is Stephanie Ramos, ABC.
Thank you, Mr. President. 2 questions for you. The military has secured the airport, as you mentioned, but will you sign off on sending U.S. troops into Kabul to evacuate Americans who haven't been able to get to the airport safely?
We have no indication that they haven't been able to get in Kabul through the airport. We've made an agreement with the Taliban thus far. They've allowed them to go through. It's in their interest for them to go through. So we know of no circumstance where American citizens are carrying an American passport or trying to get through to the airport. But we will do whatever needs to be done to see to it they get to the airport.
And one more, Mr. President. Last month, my colleague Martha Raddatz interviewed Abdul, an interpreter who was on the front lines with U.S. forces in Afghanistan. Overnight, we received a photo of Taliban militants coming to the door of his home, literally hunting him down. Thankfully, he was able to escape, but he is obviously still in mortal danger. What would be your message to Abdul, his wife, and his 3 young daughters?
We want you to be able to get to the airport. Contact us. We'll see whatever we can do to get you there. We've got to get you out. We are committed to deal with you, your wife, and your child to get all 3 of you out of Afghanistan. That's the commitment.
Thank you, sir.
Meredith Lee of PBS NewsHour.
You mentioned just now using every resource available for evacuations. Why haven't you ordered the military to expand the security perimeter around the Kabul airport? Do you have any plans to do so, given that will likely require more U.S. troops? And are you considering rescue operations to recover Americans and Afghan allies stuck behind Taliban checkpoints?
The answer is yes to the last question. We're considering every opportunity and every means by which we could get folks to the airport. That's number 1. Number 2, the reason why we have not gone out and started and set up a perimeter way outside the airport in Kabul is that it's likely to draw an awful lot of unintended consequences in terms of people who, in fact, are not part of the Taliban. We've been in constant contact with the Taliban leadership on the ground in Kabul, as well as the Taliban leadership at Daho. And we've been coordinating what we were doing. That's why we were able, for example, how we got all of our embassy personnel out, how we got everyone out of the embassy safely. That was the distance. That's how we helped get the French out of their embassy. So the question remains, there will be judgments made on the ground by the military commanders at the moment, and I cannot second guess each of those judgments to be made. But the idea of, again, let me get back to the fundamental point I made at the outset. When the decision was made by me and it was made some time ago, and I ran 4 presidents saying I wanted to get us out of Afghanistan. One of the things that is a reality is people now say to me and to others, and many of you say it on air, that why did we have to move because no Americans are being attacked? Why did we withdraw why did we agree to withdraw 2,500 troops? No Americans are being attacked. As I said before, the reason they weren't being attacked was part of an agreement that Trump had made a year earlier. We will leave by May 1st, he said, as long as there's no attack on Americans in that year period. Number one. Number two, the Taliban was taking large swaths of the countryside, north and south. None of the major areas, none of the major points of the capitals of each of these provinces, but they were all over the country. And the idea that if I had said on May the 2nd or 3rd, we are not leaving, we are staying, does anybody truly believe that I would not have had to put in significantly more American forces? Send your sons, your daughters, like my son was sent to Iraq, to maybe die? And for what? For what? So the only rational thing to do, in my view, was to set up and pre-position American forces for the purpose of evacuation, and the aircraft to pre-position those ahead of time so that we would be able to begin the process of evacuation of American citizens, SIVs, and others who helped us. The last point I'll make is this. Look, if we had decided 15 years ago to leave Afghanistan, it would have been really difficult. If we decided 5 years ago, if we continued the war for another decade and tried to leave, there's no way in which you'd be able to leave Afghanistan without there being some of what you're seeing now. But what we've done so far is we've been able to get a large number of Americans out, all our personnel at the embassy out, and so on. And thank God, so far, knock on wood, we're in a different position. Scott Detro, Scott, NPR.
Thank you, Mr. President. I just want to follow up on something you said a moment ago. You said that there's no circumstances where American citizens cannot get to the airport. That doesn't really square with the images we're seeing around the airport, with the reporting on the ground from our colleagues who are describing chaos and violence. Are you saying unequivocally that any American who wants to get to the airport is getting there and getting past the security barrier and to the planes where they want to go?
I thought the question was, how can they get through to the airport outside the airport? And the answer is, to the best of our knowledge, the Taliban checkpoints, they are letting through people showing American passports. Now, that's a different question when they get into the rush and crowd of all the folks just outside the wall near the airport. That's why we had to, I guess, was it yesterday or the day before, we went over the wall and brought in, how many? 269 Americans. So it is a process to try to figure out how we deal with the mad rush of non-Americans, those who didn't help, those who are not on the priority list, just any Afghan to be able to get out of the country. And so my guess is that no matter what, under what circumstances there's not a whole lot of Afghanis, there's a whole lot of Afghanis that just as soon come to America, whether they're any involvement with the United States in the past at all, rather than stay under Taliban rule or any rule. So what I was saying is that we have an agreement that they will let pass through the checkpoints that the Taliban, control, that let Americans through.
But given this, given the negotiations with the Taliban, the scenes that we're seeing, can you just fully explain why the plan wasn't to go ahead with these evacuations of both Americans and allies before the drawdowns began, before Bagram was closed, looking back several months? Because whether it was now or several months from now, there seems to be a broad consensus that the Taliban would make these gains and these would be needed at some point.
Well, yeah, at some point. But the point was that although we were in contact with the Taliban and Doha for this whole period of time, that some point wasn't expected to be the total demise of the Afghan National Force, which was 300 persons. Let's assume the Afghan National Force had continued to fight and they were surrounding Kabul. Be a very different story. Very different story. But the overwhelming consensus was that they were not going to collapse. The Afghan forces, they were not going to leave. They were not going to just abandon and then put down their arms and take off. So that's what happened. Thank you very, very much. Thank you.
All right, that does it. The president speaking for about 26 minutes there. President Joe Biden there, of course, from the White House, talking about policy in Afghanistan and, of course, taking questions from the reporting community. Let's get right to our Joe Matthew. He's host of Sound On Bloomberg Radio. He is there at the White House. Joe, what stands out for you?
Boy, there was not a lot of new there, to be perfectly honest, although we did hear from the President, Carol, that he's been talking with our allies in Europe. He spoke with Boris Johnson in Britain, Angela Merkel in Germany, Emmanuel Macron in France, and they will convene a G7 meeting next week to follow what he referred to as a united approach, and that is, of course, what the White House would love to see here. Whether that is what they're calling it overseas is another question, but the president said, "I took the consensus opinion." When he was asked about seeing a cable from the State Department that suggested the Taliban may be advancing more quickly than some had suggested, the president, this is really the big question, right, Carol, is how we didn't know this would happen so fast. And he said, no, I heard advice from everyone on this, and there were many cables, and I went with the consensus. He spoke as well to the pain on a human level that he was seeing in the images that we've all been sharing, Carol, and I'm not sure how this is going to roll over in terms of public opinion, but he did take questions from the press, which he hasn't done until now.
And of course, everyone, you are listening to Bloomberg Business Week, picking up the reins from our David Weston here at Bloomberg Radio. And of course, we're talking with Joe Matthew. I'm Carol Master along with Tim Stenovic in our Interactive Brokers studio. We should just highlight some of the headlines out of President Biden. He did say we're going to do everything we can to evacuate allies and partners. They have more than 13,000 people that have been evacuated, Tim, since August 14th.
Yeah, the president said this is one of the largest, most difficult airlifts in history, and the U.S. stands by its commitment that we've made to these people, referring not just to Americans, of course, who are there, but also to people who helped the United States over the last 20-year war effort.
Joe, I think this is one of those situations where, you kind of want a whiteboard, and I want to know, okay, really, truly, what were the allies that he spoke to? What were those conversations? Was everybody on board with this? And what was the intel? I mean, how many conversations have we all had here at Bloomberg saying, well, what was the intelligence going into this? Because the fall was so swift.
And of course, we heard from the Pentagon itself just in the last 48 hours that from the chairman of the Joint Chiefs and the Secretary of Defense, who said we had many models here. We had 4 or 5 different scenarios that we mapped out. None of them included the Taliban taking control of the country in 11 days. But this is clearly about what's going on now, the airlift, to your point. Every American who wants to get out will get out. That's the promise from the president. But if you guys noticed, The change in language for the next line. A couple of weeks ago, it was everyone who can get out, Americans or our Afghan allies. We will get you out. Now it's every American who wants to get out will get out, and we'll do our best with our Afghan allies, many of whom, Carol and Tim, cannot make it to the airport. We heard one story from one of the reporters at ABC about this. The Taliban has begun going door to door. You may be hearing about a softer Taliban, but there are reports of them going door to door to find the interpreters, the drivers, the others who helped the U.S. in combat the last 20 years.
We also, of course, have heard harrowing stories and seen those harrowing images of people trying to get out in recent days. Joe, you mentioned public opinion polling around this and the way that Americans are reacting, not just Americans, but the way that the international community is looking at the United States. What did you make of President Biden's answer when saying that the U.S. Is committed with its allies? And he was asked about international cooperation here and to what extent the U.S. is in contact with the international community about working with the international community to get everyone who needs to get out of there out of there.
Well, look, there are a lot of flights that have been happening that are not U.S. military flights as well. There are, a series of countries here trying to get their own people out. And in many cases, Americans are finding commercial flights and charter flights. So it's difficult to put all of that together for a real kind of idea of how many people are moving and how many countries are getting their people out. But with regard to our allies, the White House is determined to make this a united approach, as I mentioned, and that G7 next week will go a long way to doing that. Macron, Johnson, Merkel, they may be very upset about what's going on here, but it is in their best interest to limit the chaos. And I suspect that meeting next week will go a long way to getting everybody on the same page. This is looked at as an American issue, though, isn't it?
It definitely isn't. This is where, help me out here, Joe. Is it all hands on board when it comes to the U.S.'s allies in getting those folks out of Afghanistan?
Well, in terms of, maybe you can ask me the question again. Do you mean in terms of Americans getting foreign nationals out of the country?
No, I'm talking about assistance from all of the U.S. allies in terms of logistically helping people get out.
Well, I think, look, maybe they'll create a network that's doing just that. But the fact of the matter is, America is helping other countries navigate. We are in control of that airport right now. This is a U.S. military installation at the moment. Imagine the gates around this airport with 5,000 to 6,000 American troops there. This is an American operation. We got 16, I believe, C-17s out of there in the last 24 hours. There are others, though. There's, like I said, commercial and charter flights getting out of there. But no, I think if you're in Germany, if you're in Spain right now, you need the Pentagon to help you get out of there.
Right.
Joe, I can't help but look at this and look at the last week, 10 days as an inflection point in President Biden's presidency.
For sure.
Where does the administration go from here? It seems like it is down a hole.
Well, look, like I said, I think last time we spoke, we've got 3 rings in this circus now. We're going to start debating infrastructure in the House again next week. Imagine where we were last time lawmakers were in Washington talking about that spending plan. This could become an excuse for Republicans and even progressive Democrats to get some distance between themselves in this White House when it comes to spending policies, when it comes to infrastructure and taxes, because it then becomes a credibility issue. And if you were already at odds with this White House, you just got a great excuse to do that. On the other hand, Democrats still need to get that done. They want to claim victory on infrastructure. They want to get a budget, and they want to go home and take credit for fixing roads and bridges.
Right.
That has nothing to do with what's going on in Afghanistan right now, and I don't think that changes the minds of a lot of lawmakers who have a wish list to bring home.
Yeah, exactly. And it speaks to what the constituents of each of those lawmakers, what's really on their mind. As we say, it's often about their pay, what's in their pocketbook or what in terms of their jobs. Joe Matthew, I know you can continue covering all of this as you get ready for Sound On at 5 p.m. Wall Street time right here on Bloomberg Radio. In the meantime, Tim, if I look at the markets, what's going on in Afghanistan doesn't seem to be bothering. It's Friday, bothering investors today.
It doesn't. We certainly see green across the screen. And let's get an update on the latest with the trading day with Doug Krisner. Hey there, Doug.
Hey, Tim. It could be another case of dip buying, right? We heard from Bank of America today. They had some analysis showing the mentality of dip buying was clearly in place before the Fed minutes and the talk of tapering asset purchases, and BofA was looking at U.S. stock fund data. It basically indicates investor confidence of policy support. and that would support the notion of buying the dip. It seems to be in place today. Dow Industrial Average better by about 0.6%. Remember, options expire today, and that may give us just a little bit more volatility as we make our way to the closing bell in about an hour and 36 minutes from now. S&P 500 better by about 0.6%. NASDAQ comp rising just about 1%. Now, in spite of the positivity, there certainly is no shortage of risk. Dallas Fed Bank President Rob Kaplan was telling Fox Business today he's carefully watching for any economic impact from the Delta variant, and Kaplan may need to adjust his views on policy somewhat should the virus slow growth materially. Deere & Company raised its full fiscal outlook. Surging crop prices have boosted demand for some new equipment. However, the company also said supply chain challenges may continue into 2022. Shares in Deere right now off by more than 2%. And there's a lot of weakness in shares of not only the car makers, but auto parts suppliers as well. Two major automakers halting production due to those semiconductor shortages. The latest is Ford stopping production at its Kansas City assembly plant. That's where the F-150 pickup truck is built. And we have Ford shares right now trading lower by more than 1%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that, Doug Krisner. Well, let's get to what's going on in the markets for a detailed deep dive and look into that. Kriti Gupta is Markets Live reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studios, as is Katie Greifeld, Bloomberg News cross-asset reporter, also my co-anchor at Bloomberg Quick Take. Quick Take stock airing each day, Monday through Friday at noon Wall Street time. Great to have both of you with us. Kriti, a broad-based rally today, quite different than what futures were showing this morning. What happened?
They bought the dip. I mean, when you have a 4-day losing streak, this is pretty natural to see people come right in and buy. But look at what they're buying, though. It is a very defensive trading session. That tech outperformance, you are seeing some of that cyclical rally just a little bit, but they're lagging. So there is a little bit of quiet trading volume, stocks drifting higher, but people are definitely favoring tech, especially going into the weekend, which is traditionally going to be a risk-off behavior you see on Fridays.
All right, Katie Greifeld, it's just fascinating to me that we have what's going on in Afghanistan. This is something that came out of left field. Nobody would have anticipated it 3 weeks ago or even a couple of weeks ago, and yet here we are, and the markets shrug it off. What does that say to you?
Well, I mean, if you think about the markets and what traders price in, what we're seeing in Afghanistan, I mean, it's hard as a human to watch that and see those images. But if you think about the market looking forward, is this really going to alter things? Is this really going to change the earnings capabilities of the various companies in the U.S.? Probably not. Maybe you'll see, President Joe Biden maybe lose some political capital. What does that mean for the infrastructure package? But that is definitely not top of mind for the market right now. Everything is about the Delta variant and the Fed tapering maybe next week.
Right, Jackson Hole next
week, not tapering next week.
Yeah, well, exactly. Or whether, Kriti, we get more indications. I mean, Tim, how many conversations have we had this week, I think, in Beyond the Bell, our market close with our TV team, right? And everything leads back to the Fed.
It does, and now we know that Fed Chair Powell will be joining remotely using his YouTube channel for Kansas City. He will not be there physically.
Which is a big deal.
I think that's a big deal.
And you know what's interesting about today's trading session in particular is you heard comments from Dallas Fed President Robert Kaplan, who was one of the very first people to come out and say, we need to taper. And today he's saying, well, if the Delta variant gets really bad, maybe we don't, which was a total turnaround.
Wait, dare I say they're data dependent? I mean, no, I mean, this is like,
Cheryl.
No, I know, but I mean, this is something we think about.
But that's something that we've been talking about since we got the minutes on Wednesday and the minutes from the meeting that would happen in late July, and the difference in the Delta variant and the spread of the Delta variant, the difference in the way that people are going outside and actually conducting business or going to their offices or wearing masks or not wearing masks over the last few weeks. So yes, I do think it's fair to say it's data dependent. I want to talk China, Katie.
Yeah.
We got to talk China.
Got to talk China.
We're talking about it later in the show too. We talked about this a little bit on Quick Take Stock earlier in the day, like trying to catch a falling knife, right? Dip buyers are not coming in necessarily and buying those Chinese ADRs over concern that there could be further pressure on them from the Chinese government.
Because the knife is still falling.
Yeah, they really tried to buy the dip. If you look at ETF flows into Chinese-focused ETFs, but the concern was we don't know how far this is going to go. We don't know what the next shoe to drop is. We saw another shoe drop overnight, Chinese state media calling for tougher oversight to protect consumers. I mean, that took a big bite out of things like cosmetics, online pharmacies. That's what people have been scared of, that it's a moving target, and it's really, really hard to be invested in China right now.
Creedy, how do you assess what's going on in China?
Yeah, I think Katie nailed it 100%. And I think you've started to see kind of this reversion trade almost where it's, here's what's happening in China. This is a reason to buy U.S. tech, which is an interesting take on something that's happening thousands of miles away. But that's where I see some of those flows starting to come back into tech. I mean, today's a great example with that defensive trade higher.
All right, I'm stealing something from Jonathan Farrow on the real yield where he goes like around the thing. I mean, based on everything that's going on right now, what's your expectation in terms of Jay Powell? Is he going to be like transitory? We're still on hold. We're data dependent. Is he going to be very cautious? What are you hearing?
I think so. I mean, even more so than usual. He has to know everyone is hanging on his every word. Everyone is wondering how the Delta variant is impacting, how they're really viewing the economy right now. And any shift, if he gave any shift that, maybe what the inflation we're seeing is anything less than transitory, he knows that would really be upsetting to markets. So I think he's just going to toe the party line.
Creedy.
Yeah, completely agreed. I'd add that a few people I spoke to actually on the street have said that they're taking next week off because they expect it to be a no-news Jackson Hole. So what does that tell you?
Okay.
I think Jonathan Farrow's actually taking off.
Just saying. He got the memo that we didn't, clearly.
Apparently.
Maybe he'll be in Jackson Hole.
You guys are wonderful. Thanks so much for being so patient as we went through President Biden's press conference. Creedy Gupta, she's Markets Live reporter at Bloomberg News in our interactive broker studio, along with Katie Greifeld, Bloomberg News cross-asset reporter, and also Tim's Bloomberg Quick Take co-anchor.
Well, let's not get down to Dr. Ian Lusbader. He joins us each and every Friday right here on Bloomberg Business Week. He's clinical professor of medicine at NYU Langone's Medical Center, joining us on the phone today. Dr. Lusbader, always great to be able to check in with you. I wanted to start by hitting on boosters because this is the story of the day when it comes to COVID. Are you already starting to plan for your booster shot? You're a doctor at NYU. You were among the first to be able to get a COVID vaccine. Are you going to get your booster soon?
Yes, I'm not in the absolute first group of Happy Friday, by the way, Tim and Carol. Definitely a lot of challenges out there at many levels. Delta is certainly one of them. Yes, I think healthcare professionals, anyone who got vaccinated 8 months ago will be on the list, not first on the list, first on the list now. And we're already writing orders for the booster shots, which will begin next week. For solid organ transplants, immunosuppressed patients, people on chemotherapy, et cetera, and there are a number of patients who feel that they are immunocompromised, HIV patients or diabetes or patients with other conditions. So we're just going to have to see who, the distribution of that. But September 20th, at least, appears to be the next tranche of people who would get vaccinated, assuming all goes smoothly. And those would be people who are 8 months out, like healthcare providers. And there's definitely a lot of trauma, a lot of anxiety with those doctors and colleagues, some of whom have gotten breakthrough Delta infections and people who are concerned about their immunity that is beginning to drop. So
Dr. Lusbader, first of all, so good to have you back with us. And in terms of people who are immunocompromised, do they have to get a note or something from the doctor in order to be at the top of the list, at the front of the line here when it comes to a booster?
At this point, we have to place an order for that booster.
Okay.
So they do. They have to request it and meet certain criteria at this point. I think by September 20th, it will be, again, depending on how it all goes, another tranche of people. Now, there are people who do go to pharmacies and are able to get another booster shot. It's certainly not protocol. And there'll probably no real need for that. The immunity doesn't drop off a cliff. It's just a slow, gradual decline. My analogy is your vaccine is like a sponge and a Delta COVID is like a puddle. And you get splashed with this puddle. And the bigger your sponge is, the more likely you're going to be able to sop up all of that virus. Over time, your sponge shrinks a bit. And what the boosters really do is make the sponge big again so that when you are exposed to Delta or COVID so far variants, it absorbs it so your body does not have to fight off as big an infection. So that sponge doesn't just disappear, at least in most patients. So that's the rationale for why a booster is indicated at this time.
One thing that I've been struggling with is just thinking about the trouble that we've had here in the United States getting vaccine-wary people going to get vaccinated. And even those folks who were hesitant, who did get vaccinated, are they going to end up getting a third shot? And to what extent does that change the way that the pandemic is spreading? Because we have these metrics, right? Unvaccinated, vaccinated with 1 shot, vaccinated with 2 shots. And I wonder how many of those folks who are vaccinated with 2 shots are actually going to go out and get that booster shot if the CDC indeed recommends it.
You're absolutely right. I think, it's a very dynamic process. I think all we can do is educate people. I think there is still some vaccine fear, although as Delta rampages through unvaccinated people and doctors and hospitals are overwhelmed and people see that on the news, they begin to realize, hey, wait a minute, even though I may be young and healthy, I could get Delta, and they certainly can and probably will at the rate we're going. So I think we will see more of those 80 to 90 million people who are eligible getting vaccines. But at the end of the day, you can only protect people who are willing to get protected. And I think for frontline healthcare workers, as one example, for most people, if they're willing to take a booster, I think that's reasonable to do. We've certainly seen in Israel and other countries that certainly the Pfizer shot, that protection does begin to diminish and people are hospitalized who are vaccinated. And some people say, well, why should I get a vaccine? If it begins to lose efficacy, but it does provide protection and it does really reduce severe disease.
And so help me out, some really basic questions. If I got the Pfizer vaccine initially, that's the booster I have to get? Same thing for Moderna, or can you mix and match?
So at this point, yes, you're supposed to get the same shot. We don't really have a lot of data and mixing and matching.
Okay.
Certainly with J&J, there's a lot of strong data that taking the mRNA vaccine after that really gives you a boost. And so I think likely any vaccine would provide a significant boost, but at this point, the consensus is to give the same vaccine for the third if you've done the mRNAs.
Can I ask you also, for those individuals that ultimately get hospitalized and aren't vaccinated, are we better in terms of new treatments for dealing with them? What are the treatments that everybody's getting in the hospital, unvaccinated but down with COVID?
Yeah, thank you for asking that. I mean, I think we really should have made a better national effort for treatment. We've been very focused, and appropriately so, on early diagnosis and vaccination, but the problem is that's not 100%. And so we are still giving people steroids and blood thinners and monoclonal antibodies, which do seem to help, but we really should have made a better effort on antivirals and other medications, possible off-the-shelf medications that there's some studies on, and really been aggressive in doing those studies so that we can offer treatment to those 90 million people who are not yet vaccinated and who likely will get Delta.
Dr. Lustbader, earlier this week we spoke to Dr. William Hazeltine. He's written many books, started companies, and his latest book is called CVPTSD, COVID-related post-traumatic stress disorder. And I'm wondering what you're seeing in the medical community right now, what you're seeing among patients who haven't necessarily gotten COVID or have recovered from COVID, but have some sort of PTSD related to the pandemic that we've been going through since March of 2020.
Tim, you're completely right. I think we are underestimating the trauma to Americans. They were anxious and feeling vulnerable about Delta and COVID initially, confused about vaccinations or hesitant. I think what's going on geopolitically is I'm seeing patients over the last few days that are very anxious and upset about global politics. So I think we're seeing a lot of PTSD coming together and rattling a lot of America, and certainly the doctors who were on the front lines in the ICUs treating patients, watching them die because of poor, treatment availability at the time, and now seeing a surge of more cases. Everyone is really traumatized, even our frontline, doctors and first responders who you think of as calm no matter what. I think everyone is having a toll taken on them, and I think we need to acknowledge that. And, people look for guidance, and there's some conflicting data and mixed messages, which I think stress people out as well.
Yeah, the toll, we definitely see it a lot within our community. Hey, Ian, thank you so much. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, on the phone in New York. Right now, cases are topping 210 million globally, deaths passing 4.4 million.
Let's get the latest when it comes to world and national news with Nancy Lyons, who joins us live from D.C. Hey, Nance.
Hey, Tim. Well, President Biden is pledging to bring home any Americans still in Afghanistan who want to leave.
I cannot promise what the final outcome will be, or what it will be, that it will be without risk of loss. But as Commander-in-Chief, I can assure you that I will mobilize every resource necessary.
Biden says there will be plenty of time to second-guess things, but right now, he says he's focused on getting the job done. Tropical storm Henri is heading for the northeastern U.S. and is expected to be a hurricane when it gets there. The National Hurricane Center says the system is likely to reach hurricane status by tomorrow. It's now packing winds of 70 miles an hour. Well, Jeopardy is back in the hunt for a host.
This is Jeopardy! Producer Mike Richards has stepped down as host of Jeopardy! Richards was chosen last week as the successor to Alex Trebek, but his selection was seen as divisive from the beginning. Earlier this week, a report on the website The Ringer revealed that Richards had made demeaning comments about women on a podcast. In a note to staff, Richards says moving forward would be too much of a distraction. In Washington, I'm Amy Morris, Bloomberg Radio.
Hockey great Henrik Lundqvist is retiring. The longtime goaltender who spent 15 seasons with the New York Rangers announced on Twitter today that it's time. The 39-year-old who led the Rangers to the Stanley Cup final in 2014 underwent open-heart surgery earlier this year following a 2020 diagnosis of a heart condition. He ended his season with New York in 2020 and signed with the Washington Capitals prior to his diagnosis. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Isn't it supposed to be quiet on Fridays in August?
Yeah, well, it's not. This Friday is certainly an exception to that rule.
I'm like, blah. Okay, so we talked about with Kriti Gupta and Katie Greifeld a little bit about what was going in the markets, and specifically, China's a big story. I know it gets sometimes lost between what's going on in Afghanistan this week, and we continue to talk, of course, rightfully so, about what might be the next step for China for Fed policy. But China increasingly, Tim, it almost feels like every day is continuing steps in taming parts of its corporate world and its industries.
Bailey Lifschultz from Bloomberg News was on Quick Take with us earlier. He called this a moving target as to what China would crack down on next. The China taking the next step, though, in taming big tech, this with a personal data law. The country has passed legislation setting out tougher rules for how companies handle user data. This, Carol, a move pushing forward its campaign to curb big tech's influence.
Yeah, and it's been fascinating to kind of hear some of the analysis, which says, the U.S. to some extent, European regulators too, are all clamping down on big technology, concerned about the data accumulation, the privacy issues. So it's really a global issue. But for China, as we've talked with our Andy Brown of New Economy, Bloomberg New Economy, it is a lot about power.
It's about power, who has that power, and increasingly also about income inequality and wealth redistribution and wealth distribution too. Mm-hmm. There are many aspects of Chinese companies in the Chinese marketplace that have been being cracked down on, whether that has to do with alcohol or video gaming or financial services. But big tech is certainly among the categories taking the brunt of it.
Yeah, exactly. And you can see certainly the Chinese regulators, certainly when it's come to social media and the ability to communicate. I mean, the clampdown has been there for a long time. And so I like what Bailey says. It is a moving target, and it seems like every day there's a new industry, or every week.
And it raises a lot of questions about what investors need to have as far as expectations go for investing in Chinese ADRs, right? Companies that are Chinese but are listed in the United States.
Which are on a very long, protracted, bearish run, the longest that we've seen in some time. We'll probably talk about that a little bit later on in Beyond the Bell. You're listening to Bloomberg Business Week. Coming up, we're going to get to the big take and a Bloomberg Business Week story.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we have about an hour and 12 minutes until the closing bell. The equity market is pushing higher. A lot of strength in information technology. Folks were talking about a case of buy the dip. Interesting, this morning we had analysis from Bank of America showing that mentality was clearly in place before the Fed minutes and the talk of tapering asset purchases. By the way, BNA was looking at U.S. stock fund data. Investors seem to be expressing confidence in policy support as a way of taking risk and buying the dip, and that seems to be still the case today, with the Dow higher by about 0.5%. We've got the S&P 500 picking up about 0.6%, NASDAQ comp rising about 0.9%. We could see maybe a little bit of volatility. It is options expiration today. Now, in spite of the positivity in the overall market, there is clearly no shortage of risk. Dallas Fed Bank President Rob Kaplan was telling Fox Business earlier he's carefully watching for any economic impact from the Delta variant, and as a result, he might need to adjust his view on policy somewhat should the virus slow growth materially. We had Deere & Company today raising its full-year fiscal outlook, surging crop prices, boosting demand for some new equipment. But if there's a caveat here, it's this. Deere said supply chain challenges may continue into 2022, and that has the stock right now weak by just about 2.25%. And some weakness in shares of not only the automakers, but auto parts suppliers as well, on concern about that semiconductor shortage. We have shares in Ford today trading lower by more than 1.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Doug Krisner there. You are listening to Bloomberg Business Week. Carol Master, Tim Stenovic in our Interactive Brokers studio. Got to say, when I saw this morning, I tweeted the story out with the line, now what? It is today's Bloomberg Big Take. It's a most read on the Bloomberg terminal. It is in Bloomberg Business Week. It's about the methane hunters racing to change the course, Tim, of global warming.
Well, joining us now is Joel Weber, editor for Bloomberg Business Week. He's on the remote from Massachusetts. Also in the studio with us is Zach Meider, projects and investigations reporter for Bloomberg News. Joel, frackers in America's largest oil field, they are letting massive amounts of natural gas spill into the atmosphere. But the methane hunters are finding where that is leaking and helping plug the potent greenhouse gas.
Yeah, so to Carol's point, now what? But there's a little bit of a hopeful quality to this story, which is that methane is terrible stuff, and it is leaking at unfortunate rates. But we now have technology that allows us to actually see where the leaks are, and we can actually, handle it and fix it. And, if we have the willpower for this, in not so long, we can actually eliminate a lot of this problem. But, there's some key words in there that, are going to be sources of tension in the years to come. But all this reporting goes back to Zach and his interest in methane. So Zach, walk us through how you kind of found out about this area of coverage, and then how you went about telling the story.
Yeah, sure. I mean, what was special to me about this question about methane emissions is that it's really one of the big opportunities that the world has to make a difference in the pace of climate change quickly, because methane is only in the air for about 10 years. And so if you were to do something to radically reduce how much we're putting in the air, within a generation, you'd actually have a tangible effect on the pace of global warming. Something like a third of the warming we anticipate over the next couple of decades could actually be eliminated just by dealing with the methane problem.
Well, so we always talk about carbon emissions. So give me some context, Zach, in terms of methane. How much are we putting out there? Because as you say, 10 years, that to me, I can get my head around that, and maybe how we could get ahead of it. Give me some perspective, though, how much we're putting out right now.
Sure. So carbon is the biggest cause of human-caused global warming. It's the biggest chunk, but methane is the second biggest chunk, and it's responsible for maybe a quarter of what's happened so far. So it's really significant. And it comes from a lot of things. It's not like carbon comes from burning stuff, which we mostly do on purpose because it's useful to generate power or whatever. A lot of methane is like just kind of a byproduct. Cows burp it out. It comes from landfills. There's all these ways that it gets in the atmosphere. And one of the biggest is oil and gas.
We've talked about it with food waste, that all of the food waste in garbage dumps, that creating methane.
And so, Zach, what is the economic cost, not for the climate change, but the economic incentive for companies to take control of this? You have companies like BP actually blogging about this.
That's right. So that's another exciting opportunity about methane is that in the oil and gas industry, the methane comes from natural gas that just spills into the air, either accidentally or on purpose. And so that's a product that the companies could otherwise sell. So in many cases, if they plug certain leaks, they could actually get a positive return because they could sell more gas. And so there's a lot of opportunity there for relatively low cost or even profitable changes to plug the leaks.
So Zach, tell us about some of the characters that you discovered while you were doing
methane
this.
hunters.
Yeah, the methane hunters, because that's where it gets colorful.
Yeah, so I rode around for a few days in West Texas with Sharon Wilson, who's a true daughter of Texas, and she's got this $100,000 camera. She works for an environmental activist nonprofit, and she kind of drives around looking for oil wells that are spilling this stuff into the atmosphere, taking pictures and she's really funny. She loves to collect stories about her hostile encounters with oil field workers, who she always refers to as Jethro. And then we also spent some time with the folks at Environmental Defense Fund, who are kind of doing something similar to what she's doing, but they have a much more kind of cooperative view of the industry. They're trying to sort of find facts that are useful to help the oil companies actually clean up their messes.
I'm wondering about Zach, where the government comes into this and like what rules and regulations are adhered to or not adhered to. What is the regulatory environment around this?
Yeah, it sounds to me like if there was stuff spilling out into the environment, like, don't do that.
Well, yeah, but there's basically not really any relevant regulation. It's kind of a new thing just in the past 10 years that people have really focused on this issue. Methane isn't poisonous. It's not going to, kill your dog. And so, it's kind of like carbon. It's not something that we historically thought of as a pollutant until recently. And so all that we're seeing here, all the efforts that we're seeing in the Permian are almost all, they're private people like EDF doing the monitoring, and they're companies voluntarily trying to clean stuff up. But it really isn't being totally driven by a government crackdown.
So there's an accompanying quick take video that's also pretty mesmerizing stuff to watch. And one of the things that stuck out to me in that, Zach, was just how much communities that have fracking happening are affected by methane seeping into things. And there's this amazing shot of how flammable even water can be from the sink. So just talk to us about the collateral damage that a lot of people end up facing with methane leaks.
Methane is natural gas. Well, essentially, it's the main component of natural gas. So, whenever we're talking about methane emissions from the oil and gas industry, it's a flammable fuel, But I think what's kind of pernicious about methane, especially in the Permian Basin, which is where we were, it's just this incredible source of just a giant amount of methane, is there really aren't a lot of people living there, just numbers wise. A lot of these events where something's spewing into the air happens miles and miles and miles away from any humans. And so, number one, it's not easy even for the companies who own these assets to even know what's going on.
Yeah, that's a good point. Listen, there's so much in this story. I put it out on Twitter. I'll put it out again, or go to Bloomberg.com, businessweek.com to check it out. Zach Miner, thank you so much. Good to have you in studio. Projects and investigations reporter here at Bloomberg News, and our thanks to Jill Weber, editor of Bloomberg Business Week. And for those of you in New York, D.C., and San Francisco watching on YouTube, Business Week continues. For those, 106.1 in Boston, Bay State Business.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Just now, 3 p.m. on Wall Street, an hour remaining in today's session. Equities are pushing higher. Information technology really leading this advance. It appears to be another case of dip buying. Not only information tech, we've got utility and communication services shares also advancing. So the tone may be a little defensive. Dow Industrial Average better by about 0.6%. In the broader market, we have the S&P higher by about 0.7%, and the Nasdaq comp rising 1%. Options expiration today, so there could be a little bit of choppiness here as we enter the final hour of trading. And in spite of the positivity, there is no shortage of risk. Dallas Fed Bank President Rob Kaplan was telling Fox Business earlier he is watching carefully for any sign and impact from the Delta variant. He might need to adjust his views on policy somewhat if the virus does slow growth materially. We have vaccines from Moderna and AstraZeneca possibly offering longer protection against the virus than those shots from Pfizer-BioNTech. That's according to new data from the UK. Importantly, though, this study focuses on infections rather than severe disease. Moderna shares right now up just about 2%. Deere & Company has raised its full-year outlook. Surging crop prices have boosted demand for new farming equipment. Here's the caveat, though. The company said supply chain challenges may continue into 2022. Deere shares down by more than 2%. And we've got weakness not only in the automakers, but auto parts suppliers as well. Two major automakers have now halted production due to semiconductor shortages. The latest, Ford stopping production at its Kansas City assembly plant. This is where the F-150 pickup is made. Ford shares right now weaker by about 1.33%. Toyota earlier also saying it was suspending production. 10-year Treasury right now with a yield of 1.25%, and the dollar stronger against the majors with the Bloomberg Dollar Spot Index rising a 0.1%. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to the Friday edition of Bloomberg Business Week. What a week it's been. It has been a lot going on certainly the geopolitical front with Afghanistan, a lot going on in the markets, and we are continuing to watch China as we've been talking about. Another day, another step in taming big tech. Overnight, China passing legislation setting out tougher rules for how companies handle user data. It's a move pushing forward its campaign to really curb big tech's influence. Dexter Tiff Roberts is a voice we've talked to in the past when it comes to what's going on in China. He's Mansfield Fellow at the University of Montana, author, former Bloomberg Business Week China Bureau Chief. His book, The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World. We've talked to him about that. He joins us once again on the phone from Montana. Hey, Tiff, so good to have you here again on Bloomberg Radio. China, help us make sense of the big picture here.
Okay, well, Carol, it's great to be back again. I think what we're seeing is obviously real efforts to rein in a tech sector that has been relatively unregulated. So we're seeing the efforts, as you mentioned, to put new controls on the use of data. There's anti-monopoly efforts that are happening as well. We see a tremendous amount of power in a few corporate hands in China when you look at the tech sector. But beyond that, there's a real ideological element to what's happening. And as we've seen now, and with the speech that the party secretary Xi Jinping made just a few days ago, a lot of it is tied up as well in trying to deal with growing wealth inequality and almost this perception at the top that having too much wealth is unseemly in some way.
What is the end game for Xi Jinping? What is he and what does he want the Chinese Communist Party to accomplish here?
Well, I think it's a tremendously ambitious plan to really create a new, I would call it a new economic model, what I've been calling politics in command economy, in a nod to back in the Mao days who came up with politics in command. They really envision an economy which is much more government-directed and supported, one in which the private sector is far more answerable to the state. And yes, goes about trying to make money and earn profits and satisfy shareholders like in the rest of the world, but also, very importantly, has a key role to play in the society, including, by the way, supporting the Chinese Communist Party.
How do they do that, Tiff? I mean, how do they, a private sector far more answerable to the state, got that, it's clear, but how do you do that and then keep investors interested and comfortable about investing in Chinese entities? We've seen Chinese ADRs pull back in a big way here in the United States. We see Hong Kong in a bear market. How do you do both of those and do them well?
Well, I think the easy answer is there is no answer. It's entirely possible that they can't pull this off, I believe. As you say, there's huge concern already in the markets about what they're doing. We've seen a whole series of founders of these tech companies resign in the last few months. We've seen, obviously, the markets inside China as well take a serious battering. So the big question is, how do you continue to push that much more ideological control over the economy, and at the same time still have investors that want to put money in, and at the same time have innovative entrepreneurial companies that feel confident, working on trying to grow their companies?
Does it seem like the Chinese Communist Party actually cares whether or not Chinese ADRs do well in the stock market or Chinese companies are valued highly by shareholders?
Well, it does matter because they continue to see the importance of the private sector, and of course the big technology companies are a big part of that in supporting the economy. They are the biggest job creators and employers already. They should be, and they have been, the biggest source of innovation. So Beijing really does still want to. They don't want to spook global capital. They don't want to spook their own entrepreneurs too much. But at the same time, as I said, they have this very seemingly contradictory plan to try to make them far more answerable to the state. So I think they do care, but it's not going to be easy.
Tiff, so as we mentioned, Bloomberg Business Week, China Bureau Chief, you understand this country so well through its transitions, and from having really a front seat to it all. I always think about our audience and the investors that are out there. So what does that mean? How do we need to be thinking about China, who is a country that does long-term plans? So what is the future China?
Yeah, well, I think first of all, anyone who assumes that this is a short-term effort, mainly focused on regulating, as of until now, not adequately regulated tech sector, is in for a rude surprise. This is going to keep going. We will continue to see surprises that, moves that, at least in our perspective, are anti-market and could hurt the Chinese economy. So I think we can expect this to keep on going. I think for international investors, it's clear that there's certain sectors that are probably not going to be as they shouldn't be focusing their efforts there going forward, given what the Chinese government has told us. So obviously, private education, probably private health care, real estate possibly is going to be reined in as well. I think instead, companies should be looking at those areas that are clearly top priorities for the party and the government. So, green energy and modernizing agriculture and these various areas that are very important to them.
Tiff, really quick, 20 seconds. Does this slow the rise of China as we've known it?
I really do think that it does slow the rise of China. They're also facing huge demographic headwinds. It's going to get much worse in the coming years. And just cracking down on the private sector at the same time, it's just going to make things tougher and will slow the economy.
Thank you. We have been looking forward to getting some time with you and getting you to weigh in on all of this, and hopefully you'll come back real soon. Tiff Roberts, Mansfield Fellow at the University of Montana, former Bloomberg Business Week, China Bureau Chief. His book, The Myth of Chinese Capitalism, highly recommend that you check it out. I mean, in a nutshell.
Always a treat when we get to speak to you, Tiff. Really appreciate you joining us, Tiff. In the meantime, let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey. President Biden says the U.S. will evacuate any American in Afghanistan who wants to leave, and he says his administration is in constant contact with the Taliban to ensure the safety of those leaving.
We made clear to the Taliban that any attack on our forces or disruption of our operations at the airport will be met with swift and forceful response.
Biden says they've evacuated approximately 13,000 people since August 14th, 5,700 just yesterday. He says U.S. troops will remain on the ground in Afghanistan until all Americans who seek to leave are able to. Extended unemployment benefits that were put in place during the pandemic are set to expire early next month. Despite a recent surge of the coronavirus, administration officials say President Biden is encouraging states with high jobless rates to use federal aid dollars to extend those benefits after they do run out. Bloomberg's Emily Wilkins says there's little time, though, for Congress to act on any type of extension.
The House is coming back next week, but it's only supposed to be for a week. Senate's not supposed to be back until September. House is then supposed to be out until around mid-September. So if they want to move on this, they need to move quickly if they need to expand it, because there's just not a lot of time.
Wilkins says it could end up being a replay of the Eviction Ban Extension, where lawmakers had no time to act or to build support for an extension. As for that Eviction Ban Extension, a federal appeals court today said it will keep it in place. That sets up a likely battle before the nation's highest court. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic in our Bloomberg Interactive Brokers studio.
Look at me. Look what I have. I have the cover of the latest issue of Bloomberg Businessweek magazine. It just came out.
Wait,
I have the whole thing, not just the cover.
I'll see your cover for you, everybody on
yeah.
YouTube. See, wait, there you go. See, we're putting it out there for everybody on YouTube. Sorry on radio, but we're showing on YouTube the cover of Bloomberg Businessweek. Yeah, go ahead, Tim.
It's on newsstands now. The cover story is it says $120,000 to start. We'll think about it. It's all about the war playing out on Wall Street for junior bankers who've been worked so hard. And we have an update to that story with Goldman boosting junior pay beyond investment banking, this according to Financial News.
Like, do you anticipate like an auction? It's like, but 100,000, but
this is how it's supposed to work, right?
Is it?
I think it is. I think this is the market working. That's my view.
Junior bankers are in demand.
They are.
Right, so they're in the driver's seat. So we have Goldman coming out, boosting the pay, as you said, of junior staff in its sales, trading, research, and asset management divisions. They're going to pay starting salaries of $110,000 in these units. It's up from $85,000. Second years will get $125,000, according to Financial News, and citing people familiar. That's a pretty big bump.
It's a really big bump. I think we had Srinath Raj on the show earlier this week.
Yeah.
And he made the point of saying, in this day and age, it's not just these types of companies on Wall Street paying these wages. They're competing with the Amazons, the Googles, the Facebooks, of the Teslas of the world, who are also attracting talent from business school, are also attracting talent. Silicon Valley.
VC.
And I think part of it too, Carol, has to do with, okay, what is it beyond work? What is the commitment that I have to give in the office versus a hybrid environment right now?
I always think about in Shree's story, was it, remember the story we talked about too early this year, was it the Goldman Sachs, first-time analyst who did a presentation and basically said,
13 of them.
We want more work-life balance.
And it didn't even mention salary.
No.
It was about work-life balance.
And we have a lot of people come on in terms of the workforce and say that it isn't just about money anymore.
Well, I think managers have to think about that when they're thinking about the way that their employees are feeling the effects of work right now.
Check out the new issue of Bloomberg Businessweek. It's online on newsstands.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are making our way to the closing bell, about 43 minutes from 4 p.m. on Wall Street. It looks as though we've got another case of dip buying. Let's get more as we cross to the Bloomberg Macro Squawk Desk and Bill Maloney for a closer look at the price action. Hey, Bill.
And good afternoon, Doug. That's right. U.S. stocks firmly in the green today, overcoming a slow start. Dow's currently up 220 points. S&P's gained 33. NASDAQ rises by 157. The U.S. 10-year yield at 1.26%. Gold is little change, but Bitcoin is higher by 4%. Among the main 11 S&P sectors, all were in the green, led by tech and the utilities. And leaders to the upside, the Dow, Microsoft, Home Depot, and Cisco, while Intel led to the downside. And note that Microsoft topped $300 a share and traded to a record high. After earnings, Deere fell as much as 4%. And in other news, DoorDash talks to invest in grocery startup Gorillas have fallen apart. And wrapping things up, J&J hit a record high. Live from the First Rebecca News Desk, I'm Bill Maloney. Doug.
All right, Bill, thank you. And we have dollar strength, the Bloomberg Dollar Spot Index rising for a fifth day. That's the longest rally we've seen in about 2 months. And WTI crude oil a little on the back foot today. It looks as though the week will record a loss of something greater than 7%, 62.33 at the New York close. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. We have been keeping an eye on Tesla. We did see an earlier rally in the shares today, and I just want to pull it up because I think they pretty much run out of steam. I think it was only, it's back up about 1.1% here. This was following the company's AI Day, where Elon Musk unveiled a humanoid robot to take over boring work. Yes, folks, it's Elon's world, and we are definitely living in it.
Was it, though, an actual humanoid robot? It wasn't. Well,
No.
joining us now to give us all the details from AI Day and why Tesla is doing this, and also what Tesla is thinking about when it comes to chips, is Dana Hull, technology reporter for Bloomberg News. She joins us on the phone from San Francisco. Dana, it's always great to talk with you, especially when we get to talk about Tesla. Let's just lead with Optimus here, because I think that's what everybody is talking about today. This is a humanoid robot. What does Elon Musk say it can do, even though he didn't show off a real version or even prototype of it?
Right. I mean, to be clear, there was like a human dressed as a robot dancing on stage.
I mean, it was like kind of hilarious.
Sort of sentient robot. I mean, Musk made some points about the need for universal basic income, the future of labor, how the robot could be trained to do sort of menial, boring tasks. So I mean, my thought was like, okay, he's designing robots so that he can like displace all of his workers at his factories, and it wasn't entirely clear how the robot fits into the company's clean energy mission. But this is clearly a recruiting event, and he's trying to make the point that we're not just a car company now; we're also a robotics company.
Dan, I have to say, we're showing the video for our YouTube channel so they can all see it as well. It looks more like he's auditioning for All That Jazz or something. Like it's bizarro world, is it not?
Yeah, and I think what's sort of sad is that, I mean, as an event, the event was actually very technical, and it really featured all of these engineers who were on Tesla's autopilot team talking about what they've learned as they've tried to improve their self-driving software and the challenges that they faced and their efforts to kind of design a new chip and a supercomputer and how they're training their neural networks and using simulation and have 1,000-person strong, data labeling team. And they had all these other people who were not Elon speaking. And it was really kind of a cool thing to see, other people on stage talking very in depth about what they're working on. But then you had this robot come out, or this, fake robot come out that kind of stole the show. And so now everyone's talking about this, robot prototype and not the presentation. And I think he really sort of shot himself in the foot. I mean, if this was supposed to be the one more thing, it kind of took the thunder out of what they actually talked about during the technical presentation.
Well, let's talk about some of that stuff, Dana, because as you and Ed Ludlow write, over the course of several presentations, Tesla highlighted the progress that it's making on semiconductors that have been designed in-house to power the brains used for its advanced driver assistance features. You guys write that if Tesla follows through on this and licensing its tech, it could end up competing with the likes of NVIDIA and other suppliers of chips to the auto industry. What's the timeline look like on something like this as auto manufacturers, in addition to many other companies, struggle to get their hands on chips?
Yeah, well, I mean, there wasn't a firm timeline, but I think it's just part of Tesla's overall strategy of bringing everything in house. I think that instead of relying on suppliers for chips, they're trying to make their own, and they said and it's still far away from actually being in high volume production. It's not clear who's fabricating it, but just the fact that they're even doing it, I think, is exciting to people. And and I mean, again, everything that Tesla does, Musk always kind of sets out aggressive timelines, and it takes a while for them to actually come to fruition. But, I think they were just trying to give a flavor to people that, like, listen, we're trying to bring all this hardware in house and do it on our own.
Dana, how do you know this company so well? You know Elon Musk so well, and you've seen the promises, the things that don't happen, or the timeline that changes, then ultimately, bam, this is a car company that everybody else in the industry has been looking at and upping their game as a result. How do you kind of strategize or think about the news and that AI event yesterday into terms of what it will ultimately really mean for Tesla longer term?
I mean, I think that, Tesla's mission is to accelerate the advent of sustainable energy. And they have clearly done that on the car side because they are very, well known for making electric cars. They have pushed everyone else in the auto industry to make electric cars. But now they've kind of got mission creep where, they've got these energy products that they don't talk about that much, including the solar roof and the Megapack and Auto Bidder. The company's corporate website now features the big batteries for utilities. But then last night, they're like, oh, and we're also a robotics company. So I just feel like Elon is trying to capture the best and the brightest talent. And he's like an octopus who has his tentacles in many, many things. I think the question is, can they keep working on these additional projects while executing on the main projects? They have a lot going on right now with these additional factories in Austin and Berlin, and these products like the Cybertruck and the semi-truck that have not come out yet. And so, is showing the world that you also have a robotics unit, I mean, that's cool, but like, what does that mean for the cars? I mean, I felt like what was missing was sort of tying this all together.
I guess he did say, though, and as you point out in the story, that it uses the 8 cameras that are used in the full self-driving to conduct itself, right? Just in the last 10 seconds we have?
Right. Yep. There is a bigger vision there. I just don't know if it was super articulated.
Right. Totally makes sense. Dana Hull, technology reporter for Bloomberg News, joining us on the phone from San Francisco. You can follow her on Twitter at Dana Hull as well.
Tesla shares, by the way, up as much as 2.8% today, now with about a 1% gain. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Is it soup yet?
Is it soup yet?
You know, like the end of the day.
Oh, yeah, I
It's
know.
an old commercial
I think
or
it's,
something.
isn't it 5 o'clock?
Somewhere?
Yeah.
It is. Yeah, in Asia it's tomorrow already, right?
It is. Hey, this is one I was excited to get Lucas Shaw on to talk about. In just a few
Yeah.
minutes, we're going to be speaking with Lucas Shaw all about what exactly is happening with OnlyFans. This is a company that makes so much in revenue, upward more than $1 billion.
Yeah, and if you're scratching your head saying, I have no idea what it's about, you're not alone, everybody.
No, there are a lot of people who don't know what it is, despite the fact that it has grown so much. We're going to explain all that and more and why it is changing its ways in just a few minutes. In the meantime, let's get a check of the trading day with Doug Krisner. Hey, Doug.
Hey, Tim. So we're about 28 minutes until the closing bell. We have higher stocks, information tech leading the advance. Appears to be another case of dip buying. Right now, the S&P 500 head by about 0.8%. It's not just info tech. We've got utility shares and consumer discretionary names advancing as well. And do recall that it is option expiration today, and that may be contributing just a little bit of volatility as we make our way to the close. In spite of the positivity, though, there is clearly no shortage of risk. Today, we heard from Dallas Fed Bank President Rob Kaplan. He told an online event he's carefully watching for any economic impact from the Delta variant, and as a result, he may need to adjust his view on policy somewhat should or if the virus does have a material negative impact on growth. Dow Industrial Average right now ahead by 0.6%, and in the NASDAQ market, the composite index higher by more than 1.1%. Deere & Company raised its full-year outlook. Positive, yes, but the company also said supply chain challenges may continue into 2022. Deere shares weaker by more than 2%. 10-year Treasury right now with a yield of 1.26%, and a down day for crude oil with WTI finishing off by more than 2%, settling at 62.32. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week right here on this Friday, August 20th. Carol Master, Tim Stanovic. Hey, among our most read stories on the Bloomberg today, one on OnlyFans. It's a social media company that, I'm transparent, I'm going to tell you, I had no clue. But Tim knew.
I knew what it was, but I only knew because Lucas Shaw has written about it for months. He was one of the early reporters to report on it. He's entertainment reporter for Bloomberg News. He joins us on the phone from LA. Lucas, let's start with the news here. The company is moving away from allowing creators to post sexually explicit content. First, though, for people who don't know what OnlyFans is, you've done so much reporting on this. Explain what exactly the platform does.
So it's a website that a celebrity or an influencer, really anyone, can use to charge their fans or charge other people for exclusive photos, videos, types of media, but primarily photos and videos. It is most popular or perhaps most famous for kind of its place in the pornography, sex work industry. You have a lot of especially young women who use that to charge different fans for naked photos of themselves, for scenes that they film, for messaging. There's some women I speak with who said that the key to it is actually like 50% therapy, 50% kind of pornography. But in recent years, it has become, and really in the last year, the popularity of it both exploded and it sort of entered the cultural mainstream such that people who are not sex workers were also using it.
Well, and you wrote about this back in December, too, and it got a lot of attention because of Cardi B.
Yeah, so Cardi B started her own OnlyFans. There was a rapper named Tyga who started an OnlyFans. The actress Bella Thorne started an OnlyFans. Beyonce talked about OnlyFans in one of her songs. It did start to kind of seep into the mainstream, and the company's been kind of doing this dance for the past year where it wants to capitalize on this and become kind of a mainstream service, but didn't necessarily want to sort of forsake where it came from. And that's why this announcement this week, I think, was so jarring for a lot of people, is it seemed like OnlyFans was sort of spiting the people who had made it so popular in the first place to chase something. And it's a little bit confusing because it's OnlyFans said that this was related to payment processing. There had been a report earlier this week that they were struggling to raise money. And so the exact rationale and even what the specifics of the rule changes are still unclear, which has left a lot of the people who use the platform very confused.
Well, let's try to get to the bottom of the rule changes, because the company said it's going to bar sexually explicit videos starting in October, but at the same time, it's still going to allow nudity. How does that work?
Well, I wish I could explain it, because I'm not even sure myself. What it sounds like is, if you want to send someone a nude photo, or if you want to post a nude photo, you will be able to. That seems legal. Outright having sex on camera seems like it probably will violate the policy, but there's a whole host of things in between where it's not really clear, and I don't know what I'm allowed to say on the Bloomberg airwaves. But there are things, if someone is pleasuring themselves, does that count as a sexual conduct or not? If so, the truth is that I don't know, and OnlyFans has not clarified.
Right, and that's part of the confusion out here. I do wonder, though, this kind of platform, Lucas, how much of its success is contingent on it getting the sexual content off? How much of its success so far has been because it has sexual content on the platform?
It's a great question, and it's a balance they're trying to strike. I've spoken with a bunch of people who are sort of confused as to why they wouldn't just be comfortable sort of being this multi-billion-dollar porn-driven business. There's nothing, there's nothing really wrong with that. In their efforts to raise money, it's been made clear to me several times they don't actually need to raise money. The reason they're raising money is they want a mainstream investor to validate the company in the eyes of society, part of this mainstreaming of the business. So as a business, it's already doing incredibly well, and you do wonder if they choose to forego this, if it will be less popular because most of its most active users will stop using it. At the same time, they do see this big opportunity. We're sort of at this moment where we're always talking about the kind of the quote creator economy, which is this influencer driven, where everyone is a creator, everyone posts and thinks and should be paid for it. And there are businesses like Patreon that are worth more than $4 billion because people use it for to do many of the same things that people use OnlyFans for, and that's sort of what OnlyFans is going after.
Hey, Lucas, before we let you go, just contextualize for us how big of a business OnlyFans has become in a short time.
So in 2020, they booked more than $2 billion in sort of gross sales, of which they keep about 20%. So their take of that was, I think, about $400 million in sales. In 2021, they were on track to more than double that.
Wow.
So this was going to be a company this year that, gross sales, I think, between 5 and 6 billion. Their take home more than $1 billion.
Massive.
That's pretty tremendous growth rates. Sounds like we'll be watching and figuring out what the next chapter of this one is, certainly as we get more clarification on that policy. And I know you'll be following it. Lucas Shaw, thank you. Entertainment reporter at Bloomberg News on the phone from LA. That's some significant growth rates.
Significant growth rate, significant money. And I also wonder about competitors. We're going to have to get Lucas back on and talk about that as well. In the meantime, let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden says the U.S. is dealing with one of the most difficult airlifts in history, but he says his administration has a singular mission.
Let me be clear. Any American who wants to come home, we will get you home.
Biden says he's making the same pledge to Afghan asylum seekers. He says the G7 will be meeting next week to coordinate the new approach to Afghanistan. Vice President Kamala Harris is heading to Asia this weekend in the Biden administration's most high-profile trip yet to that region. Bloomberg's Ann Cates has more on that trip.
The Vice President will look to bolster economic and military cooperation in China's backyard as she visits Singapore and Vietnam. Southeast Asian officials will be looking for Harris to reassure them of America's role as a major trading partner that offers a reliable security presence against Beijing's assertiveness in areas like the South China Sea. Carl Schuster, a former operations director at the U.S. Pacific Command's Joint Intelligence Center, tells Bloomberg that in many ways, the U.S. is playing catch-up in Asia as a result of it paying little attention to the area over the last 20 years. In Washington, Ann Cates, Bloomberg Radio.
The new host of Jeopardy, Mike Richards, has quit after racist and sexist comments were uncovered from years ago. He was one of the many guest hosts on the show before a decision was made.
Let's get into the Jeopardy round with these categories.
Richards said in a staff memo that moving forward as the new host of Jeopardy would be too much of a distraction for fans and would not be the right move for the show. Another search is expected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks, Nance. Carol Masser, Tim Stenovic in our Interactive Brokers studio. Nancy Lyons talking about Jeopardy. Mr. Richards, he was the executive producer of Jeopardy, named as Alex Trebek's replacement just last week. We heard this from Nancy. But offensive and sexist comments he made on a podcast several years ago have resurfaced. He's apparently removed as host, or he quit, but he will remain as executive producer.
So he gets his old job back.
Yeah.
This is a story that everybody is talking about today. First of all, I didn't know there were so many Jeopardy fans.
Yeah.
This is like...
Okay, I'm not a nerd, but
Do you watch every
night?
night?
No, we don't watch religiously, but we nonetheless like to watch as a family.
But it raises the question of, okay, well, first of all, there was a lot of controversy with how he got picked himself, considering that at the beginning of the search, he was the one who was tasked with being responsible for finding Alex Trebek's replacement.
Yes.
Second of all, how are they going to do the search this time around? Well, Jeopardy has said they're going to continue with not rehearsals, but tryouts, similar to what we saw in the last few months.
A list of new names?
I don't know.
Group?
I don't know if it's going to be new names or the same group, but there are already people whose names people from who tried out last time, like LeVar Burton, for example. His name's already come up.
Yeah.
With many people I've seen on talking about this on Twitter.
I mean, this was a big deal. We all kind of watched it unfold on air as it happened. I have to say, years ago, when I was at another network, business network, I did a story on the business of Jeopardy and Wheel of Fortune, because those brands, first of all, were being made into slot machines and just all these things. And I went out to the West Coast, met Alex Trebek, did this whole story. It was fascinating. It was such an engine. And first of all, it made so much money. It was unbelievable. And they would film it, within a few months.
Production is so efficient.
It's phenomenal. And so much of the team had stayed there. I mean, had been there for years. And but it was a property that was so valuable, and that's basically what we're looking at as a business story of it, and it is.
I'm going to go dig up that report, Carol, see if I can find it.
My old editor is looking to send it to me. It's been a long time. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Under 13 minutes to go until the closing bell for the Friday session. We do have higher equity prices right now. Information technology, utility shares leading the market higher, with the S&P 500 better by nearly 0.9%. Seems to be another case of dip buying. And remember, too, we've got a lot of options expiration happening today, and that is undoubtedly having a little bit of impact. But it's curious because volatility is actually falling. The VIX index right now just above 18. Dow Industrial Average ahead by 0.7%. We've got the NASDAQ comp climbing nearly 1.2%. In spite of this positivity, though, there is no shortage of risk. Think Delta variant. Dallas Fed Bank President Rob Kaplan was saying earlier today during an online event he is carefully watching for any sign that the variant could impact the recovery of the economy, and he might need to adjust his view on policy somewhat if the virus does slow growth materially. 10-year Treasury last quoted in New York at a yield of 1.26%. We're seeing weakness in shares of car makers and auto parts suppliers. Two major automakers halted production due to semiconductor shortages. Ford being the latest, it is stopping production at its Kansas City assembly plant. This is where the F-150 pickup is made. The stock right now weaker by just about 1%. Toyota saying that it will suspend output for several days at nearly all its plants in Japan. Overnight, shares in Toyota were down about 4% in the Tokyo session. I'm Doug Krisner, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is definitely a wacky Friday. And Tim, I'm just
I
going to say
didn't even know what month it is.
You and I were like, what?
Counting on fingers. It's August 20th.
We are counting. Who needs a calculator? We're counting on fingers. If I count on my fingers, I would have to count higher in terms of those major market averages. We heard Doug just talk about it. We are, Tim, near our best levels of the session.
We certainly are. Let's get right to the drive to the close with Prabha Ram, portfolio manager at American Century Investments. It has $240 billion in assets under management. Prabha, it's great to have you back on the show. How are you?
Doing well. Thanks for having me.
Help us make sense of the week that was, because if we take a look at where we are today, even though, and we just heard from Doug, the Dow, the S&P, and the NASDAQ are all in the green, and NASDAQ even higher to the tune of 1.2%. If we look at the last 5 days, we're in the red. The Dow's down more than 1%, the S&P 500 down more than half a percentage point. How would you characterize the volatility that we saw?
Tim, I'm going to point to the University of Michigan Index of Consumer Sentiment. Now, that was a tough number. It was down 13.5% month on month, and actually looked the same as April 2020, when we were right in the thick of COVID and before anybody had been vaccinated. And I'd like to borrow something the chief economist of the U Michigan survey had to say, which is he called it a mix of reason and emotion. Reason because, yes, the Delta variant has been a concern, and what should have been a robust reopening has slowed down some on the margin. And so we're seeing some of that in the numbers. And then, of course, on the supply side, we have the chip shortages, labor shortages. We can talk about all those. And then the emotion aspect of it. People were exuberant about being able to get out and do their thing, get back into offices. And that balloon has been popped a little bit. So I would call this week, similar to what Richard Curtin called it, which is a mix of reason and emotion. People see the numbers. It's obviously not peak COVID, but, there are some concerns on the edge.
Don't you feel like, Prabha, there is Main Street and then there's Wall Street? Because here we are at our highs of the session, and it feels like we are shrugging off so much once again. We have said, man, I wish I had a buck for every time we said dip buyers today and yesterday. So how do you rationalize that gap between what some people are feeling on Wall Street versus what some are feeling on Main Street?
I would like to go back to kind of the reason versus emotion discussion here as well, right? So if you, step back, Carol, and look at the numbers, right? There's been so much stimulus in the system in the last year and a half that GDP is back to pre-COVID levels, even though that's variable, right? Different parts of the economy look a little bit different. But then we've done that with 5.7 million lesser jobs. Now, for the people that had to step away from the job market, that's a negative. But then somehow, we've increased productivity. Maybe we just work better from home. Who even knows? But what has happened is, the economy is back at the levels of pre-COVID, and it continues to march strongly, especially because of the productivity gains we're seeing with the digital transformation. And everybody has embraced it, and that's probably what you're seeing, the two sides of the coin, if you will.
Well, wait, one thing I just want to say, that to me is blowing my mind, right? We are back to pre-COVID GDP levels with 5.7 million fewer workers. So it makes me wonder, are companies reassessing, do we really need these workers?
Well, that is a concern. Well, here's the thing, right? So if you assume a growing economy, then we are going to need people. Now, the other side is productivity means doing more with less, and that's less resources, including people.
Right.
But a growing economy will absorb workers. And we are seeing that this is variable. If you are a tech worker, they just cannot find enough experts in AI or machine learning. But then there are other parts of the economy, especially lower wage jobs, that are struggling. And then the other thing, Carol, that you and I can appreciate is school openings are variable, right? Kids go back to school, but then what happens is once they get there, if there is one COVID patient in the school, then the school shuts down. And that has become a problem, especially for women getting back in the workforce. And a lot of them have just sat out. It's a labor participation problem more than because there are plenty of jobs. People, companies are looking for people. It's just, some people cannot get in for some reason, and some people are just not, they're not qualified.
Hey, Prabha, I want to go from macro to micro and get some of the stocks that you're keeping a close eye on and why you are bullish on those. Let's start with Square, the company just weeks ago announcing that it would acquire Afterpay for $33 billion. Why Square?
Well, Square has been one of those stocks that has two distinct ecosystems, and they just have a product design ethos that somehow elevates products into not just network effects, which we've come to expect in tech, but almost virality. And why Afterpay? They paid $33 billion for this Australia-based business.
Buy now, pay later.
Which is more global now. Buy now, pay later, which is, pay back in 4 installments, 6 installments, 4 installments. And here's the attraction, right? There are two distinct ecosystems, very successful, each on their own right, the seller and the cash app ecosystem. And this gives them a way to bridge the two. Why Afterpay? And Afterpay, serves a younger demographic. They pointed out that the average age is 33. It's mostly female. And then they are also a marketing lead mechanism. So one of the stats that I saw that blew my mind away is that when someone comes into the Afterpay app, the seller can expect 8 times lead conversion, compared to a Google search lead. And then there's no credit risk to the seller, and then they get a 30 to 40% lift in average value. So, and then the consumers like it too because it's an app that opens up new merchants to them. So it's completely complementary as well. Get Square to go more international more quickly, and more importantly, bring the two ecosystems together. And with companies, that have a data DNA, that's just huge because they see every transaction, and there are so many other products that they can sell into this system.
Hey, Prabha, just got about 20 seconds here. You also like Nike, well-known brand. It's up 18% so far this year. Just quickly, what's your thesis here?
Nike, is a very misunderstood digital transformation play, and they picked up what's called a triple-double in 2017. I mean, it sounds like an NBA game. So they said two times the innovation, 2 times the speed, 2 times direct to consumer. So this is basically an app play, a company that has gone from selling through department stores to selling direct to their consumer, and then having it so well done that they've really cut out the middlemen and 50% of, a third of their business. So that's the story there, and that's why it's appealing.
Well, 2 names that are certainly familiar to our audience. Great to break it down with you and also talk some of the macro outlook here. Prabha Ram, she's portfolio manager at American Century Investments, and her fund, the American Century Focused Dynamic Growth Fund, is up just about 29% in the past 1 year, and it has consistently beat most of its peers in the past 5 years. All right, coming up, we'll be joined by our TV team for Beyond the Bell on radio, TV, and on YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the trading week. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. As always, we are joined right now for our global simulcast, Beyond the Bell. Carol Massar, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the crucial moments of the day and the week. And Carol, did you just go?
I did. Don't you all feel that way? It feels like it's been 5 weeks. I mean, Afghanistan, the Delta variant, those Fed minutes. There's just so much going on. And we are still waiting. I mean, what a week it was, and we are still waiting on Jackson Hole. There's no doubt about it, Tim. That's going to be our focal point next.
Yeah, it certainly will. And despite the fact that we are seeing a broad-based rally today, if we take a look at how things are going to finish, down for the week, the Dow finishing down more than 1.1%, and the NASDAQ finishing in the red as well. The S&P looking like it's going to be down at the last 5 days, about 0.6%.
Yeah, and Tim, we were having a great conversation, of course, that we are so glad that we can bring you into this, really about how on the surface things look good, but underneath the surface you've had a lot of sectors, Caroline, that have had some of these big pullbacks if you dig a little bit deeper, though the headline indice may be hiding some of that.
I sort of feel on a single name basis, Amazon has sort of been such a tell of how one individual stock can lose so significantly we're down about 11% from its high back in July, but it's not the only name that has seen significant sell-offs from their 52-week highs.
Want to know what's the best performing group in the past 5 days? It's healthcare, utilities, these safer plays. Energy, though, bottom of the pack, really remain beaten up this week, down 7%.
And I'm just going to repeat the stat that we were talking about before we came to you guys here. More than 200 individual members of the S&P 500 are at least 10% below their 52-week highs. More than 300 are at least 5% below those 52-week highs. We're getting the closing bells here in New York, and once again, we talk about this on both a daily and a weekly basis. On a daily basis, everything is pretty much in the green. The Dow Jones Industrial Average up 0.6%, S&P 500 up 0.8%, the Nasdaq Composite up about 1%. But on a weekly basis, everything is down. The S&P 500 down 0.6%, the Nasdaq down 0.7%, the Dow down 1%, the Russell 2000 down 2.5%, and even the Philadelphia Semiconductor Index down about 2% here on a weekly basis. Carol, that really gives you a sense here of not only where we've come from, but where we might go here, as a lot of people do sort of wait for Jackson Hole. They wait for more economic data. They wait for another catalyst to decide which way to go.
Right. And speaking of catalysts, I mean, all of this uncertainty and the back and forth increased the volatility that we saw. The VIX, whether or not you follow it as a major index, it was up about 19.5% this week. I mean, we're still below 20, and we're still below some of the highs we saw in the financial crisis, and certainly some other meltdowns, if you will, and even the meltdown back in the spring of 2020. But nonetheless, one of the big themes this week, Taylor, is increased volatility.
Did you just quote the percent change on the VIX? Tom Keene would rattle.
I know he would yell at me.
Knifing me in the
I know.
Hopefully Tom's already asleep.
That's okay. You know what?
It is for
I know. I'm going to try to save us here as we take a look at some of the sectors, of course, with the winners and the losers. And I have to say, at least from the sector level, things look green pretty much across the screen. But Carol, there is that defensive tone with it, with durables, utilities, food and staple, insurance. Those are all the sectors that are defensive bond proxies that are up at least 1% on the day. You go to the bottom of the screen and it's actually still green for a radio audience, but it's been the story of the week, the relative underperformers. Banks and energy and transports and beverage and capital goods and some of those more cyclical sectors, Carol, that still for the week are the big underperformers.
All right, I'm going to try and save face with Woof, Petco Health and Wellness, up for 2 days in a row, was up about 3.5% in yesterday's trade, up another almost 8%. This was after a second quarter earnings beat, comp sales beat, full year guidance. They raised that. They got an upgrade at Credit Suisse, and they also announced a price target of $28 a share, stock closing at 21 and change today. today. I will point out another, though, analyst actually lowering. Credit Suisse raised it in terms of its upgrade there and announced a price target, but UBS lowered it to 22 from 27. NVIDIA, another name I've been watching, up again 2 days in a row here, almost higher, 4% yesterday, up another 5% in today's session. A top gainer in the NASDAQ 100. We know they reported their earnings after the close Wednesday, and this is even though British regulators came out and they warned that NVIDIA's planned $40 billion takeover of chipmaker ARM should get a longer antitrust probe. So some of that happening. Illumina, Tim, I think that was one of your decliners yesterday.
Yeah, it was one of mine yesterday.
All right, so we saw this one actually gaining about 3.5% in today's session. Today, the EU opening up a probe and possible fine as a result of it saying, we're going to close that deal to buy the cancer testing startup Grail before European regulators have finished their review. It's kind of like, so take that, everybody. And nonetheless, investors bought it up today, Tim.
Well, some big stories with companies that were making moves lower on the day today. Let's start with John Deere, the company finishing the day down more than 2%. The company fell as much as 4% earlier, reported earnings and boosted its guidance. But on the earnings call, executives said that challenges including rising raw material costs, labor issues, logistics with the supply chain, those are going to even get worse in 2022. Investors sending shares down accordingly.
But they're still selling a lot of these things, right?
Yeah, they're still selling, and equipment around the world is old. It needs to be replaced. Yeah. But still, these supply chain issues, the company's not immune to them.
Do you have one? Have you ever ridden one of these things?
This would take up my entire apartment.
Oh, okay.
Yeah,
I think you can get kids versions, can't you?
Yeah, maybe I can get a kid.
You'd be the most popular guy in Brooklyn.
Exactly. Giving rides on the Deere. Let's talk Snowflake, Caroline, down more than 4.5% on the day. This is all because of a Cleveland research note that came out saying the company's signings growth slowed from Q1. It was down as much as 11.3% earlier in the day. The company reports earnings after the market close next Thursday. We'll, of course, bring those to you live as soon as they cross. But keep an eye on that company as we start next week as well. Ross Stores finishing the day down more than 2.7%. It's all about the outlook. The company boosted its third quarter EPS guidance, but it still came in below analyst estimates. Expectations on freight costs, supply chain costs. Do you guys see a pattern here?
There is a pattern. VW, we're going to talk Toyota.
Yeah.
I mean, supply chains just in every way wreaking havoc, and it plays into what's happening in terms of commodities as well, because this is where you've got supply chains really being felt, some concerns, of course, about also China, the shutting of the port. Commodities have had a rough week, and when we go cross-asset, I'm still looking at oil on the downside. They've had the worst sell-off, longest run, 7 straight days of selling in crude, which is currently down by 2% on the day, $62 is where we trade. 7 straight days of losses, that's the longest since 2019. We see steel pop higher, but iron ore has been like basically 40% off of its high back in May. Zinc is down off by 0.4%. So clearly commodities still trying to tell us they are worried about growth, they're worried about the Delta variant, they're worried about China. And we're also seeing that reflected in the FX market a little bit. Dollar has been higher on the day, but interestingly, euro got a little bit of a bid today, up at $1.17 is where we trade. Still some of those haven trades doing well, the Swiss franc up at 91 cents. So we are also looking at a mixed picture when it comes to sovereign bonds, Taylor. You can tell the US story, but from a European perspective, it looks like there's still some haven searching going on with money moving in across the board, whether it's Norwegian, Australian, or Danish debt.
And certainly on the week, you've seen that on the 10s and the 30s. I want to point out that it was 8 days ago that we have been falling every single day in yield on the 30-year yield. We peaked at 2% on the 11th. We're down to a 187, and that's 6 basis points on the week as you go back even further to a week and a half, and the story looks even worse than that. The 10-year yield today, of course, we snapped that streak and yields go up a basis point, but before that you had 6 straight days of declines on yield. So Carol, this really paints the picture of some of the safe havens that we have been looking at, and if you say that the bonds had been leading us up to this point, you certainly saw the fallout of that a little bit this week with some of that rotational and that cyclical trade. Relative to defensives, it's been a one-way street down.
Well, and the move in yields really tells a lot about kind of the change in sentiment and tone. It's been a jittery week. We talked a lot about dip buyers. I feel like we said it a lot this week about investors coming in for opportunities. One of the things, though, that's interesting is as we get ready for Jackson Hole, right, folks, we were all talking a lot about the Dallas Fed President, Robert Kaplan, who has been one of the hawkish members. He's not a voting member, but all of a sudden maybe changing his tune about when to start tapering back and not being as hawkish. And you do wonder if his mind can change. What does that mean in terms of the Fed think?
Do you think the market, though, I mean, I know they're going to hang on Jay Powell's every word when we hear from him.
His virtual word,
on Friday,
right?
His virtual word.
On YouTube, yeah.
But, I mean, is it really going to matter? Because at this stage here, they've pretty much much communicated at least what they want to do. And unless he comes out and says, we're changing course, or we've seen something that is going to cause us to change course, what would the market reaction be otherwise?
Well, I also wonder what the data is actually saying, because if we look at TSA data, we do see that fewer people are flying than we would expect to be flying right now. But then we anecdotally speak to people like Ron Coughlin, the CEO of Petco.
Yeah.
I know you guys spoke to him yesterday.
Yeah, well,
he
Pet's
said
never
he hasn't seen any change in foot traffic, even in places like Florida with the spread of the Delta variant. So it raises the question, perhaps we are so used to spending and living in a pandemic that we're just, this is the new normal and this is how we're spending our money.
But then when you get headlines that Apple is delaying its return to work until out January now, wasn't September, not October, now not January, you do start to feel this drip feed that things aren't getting any prettier. So
can I just say, it's been a crazy week, and it ended up with Elon Musk and his bot, and that kind of just sums
Says
up.
it all.
It says so much. Get ready for Jackson Hole, everyone. All right, that's going to do it for our cross-platform.
See you at the mall this weekend.
The metaverse. I'll be in the metaverse.
I'm coming for you, Romaine. All right, have a good weekend, everybody. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. Join us on Monday, same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I think we're tired.
I'm feeling energized now. Get to the end of the day on Friday.
Now you feel energized?
Now I'm ready. I'm ready to tackle the weekend.
The coffee beans, the chocolate-covered coffee beans.
I know, that's my secret. That is my secret.
It's going to be, I feel like, a TikTok until we get to Jackson Hole. And I think Romaine was spot on in that. The Fed, Jay Powell, very clear about what they're looking for. And if there's nervousness, they are certainly not going to do a 180 in terms of policy. That is not something that they would do to the markets.
Yeah, you make, and I'm really glad you brought up Dallas Fed President Robert Kaplan. As you said, he's been hawkish in the past. So if he can change his thinking on this, what does it say about the way that other members of the Fed and ones who are voting are thinking?
And specifically, as we said, he favors ending the $120 billion of monthly asset purchases sooner rather than later, but he said he may adjust his view if the Delta variant persists and curbs economic expansion. Those FOMC minutes also said a lot about Delta, didn't it?
Yeah, they did. But that was from July.
That was from July, and things have certainly gotten a little bit worse. All right, you have a good weekend.
Thank you. You too.
Okay. All right, let's get a check on world and national news. For that, back to Nancy Lyons in D.C. Hey, Nancy.
Hey, Carol. President Biden is pledging to bring home any Americans still in Afghanistan who want to leave.
I cannot promise what the final outcome will be, or what it will be, that it will be without risk of loss. But as Commander-in-Chief, I can assure you that I will mobilize every resource necessary.
Biden says there will be plenty of time to second guess, but right now he says he's focused on getting the job done. Well, lawmakers are second-guessing the administration's approach and want to learn more about the evacuation from Afghanistan.
Members of the House Intelligence Committee will receive a classified briefing on Monday from Biden administration officials. Sources tell Bloomberg government they'll discuss the situation on the ground in Afghanistan, how circumstances evolved before Kabul fell, and what comes next. This after today's unclassified briefing for all House members, but members of Congress from both parties still want more information from the administration about just what went wrong in Afghanistan. In Washington, I'm Amy Morris, Bloomberg Radio.
Tropical storm Henri is nearing hurricane strength now, packing winds of 70 miles an hour as it sits about 300 miles from Cape Hatteras, North Carolina. The storm is expected to make landfall this weekend in southern New England. Well, the new host of Jeopardy, Mike Richards, is now the ex-host of Jeopardy. He has stepped down after a podcast he recorded years ago uncovered some racist and sexist comments. In a staff memo, he says the controversy had made it clear moving forward as host would be too much of a distraction. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week, and Petco came out with their earnings, Petco Health and Wellness this week, and we were lucky enough to catch up with the Chief Executive Officer for Petco. We're talking about Ron Coughlin, and here's a little excerpt from that interview where he talks about the company's masks and vaccination policies.
We made the decision several weeks ago after letting our employees make their choice that they all have to have masks on, consistent with CDC's. We've been following CDC, and then when there's local regulations, then we defer to those. So with our customers, if you're vaccinated, it's your choice. If you're unvaccinated, we ask you to wear a mask.
Do you plan to require your employees to get vaccinated?
At this point, we have not made that requirement.
Why?
You know, we tend to resemble the U.S., and that's a person's personal medical choice. And we are respecting that, though we are encouraging. So we've offered payments, we've offered time off, we've brought vaccination trucks to sites, but at the end of the day, it is person's personal choice. And there's also people who have medical reasons why they can't do it.
Do you ask them do you ask your employees if they've been vaccinated, and can they do other things if they have been vaccinated?
We ask them to submit when they get vaccinated, but we have not asked them if they are vaccinated.
I do wonder if and when the CDC does fully authorize these vaccines, would you change your stance and require them?
Yeah, so we're going to require for our support center teams, absolutely. We've already signaled that, so those are our headquarter teams. But right now, we're not requiring vaccines for folks who work in our distribution centers or in our stores.
All right, and that is Petco Chairman and CEO Ron Coughlin. And you can hear more of that interview. It's on our Bloomberg Business Week weekend show on Bloomberg Radio. Also find it on our podcast feed at Bloomberg.com. We also talked a lot about the outlook, e-commerce, and all the people coming into the stores with their pets. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had a push higher in the U.S. equity market today, and information technology led that advance. So the tone was a little defensive, and it appears to be another case of dip buying, I guess you could say. But in spite of the positivity, there is no shortage of risk. Dallas Fed Bank President Rob Kaplan told an online event today he is carefully watching for any economic impact from the Delta variant, and he may need to adjust his views on policy somewhat if the virus were to slow growth materially. So I guess you could say maybe he's walking back the taper talk just a bit, but I don't want to put too much emphasis on that. S&P 500 today better by 0.8%. The Dow rising not quite 0.7%. And in the NASDAQ market, the composite index was higher by about 1.2%. Moderna shares jumped 2% today after a British study indicated vaccines from Moderna and AstraZeneca may offer longer protection against the virus than those shots from Pfizer-BioNTech. Importantly, though, this study does focus on infections rather than severe disease. We had Deere & Company raising its full-year fiscal outlook, but the company offered this caveat: the supply chain challenges may continue into 2022. We had shares in Deere today down by more than 2%. 10-year Treasury last quoted in New York at a yield of 1.25%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Really appreciate that update. Well, you might recently recall a story that we talked about. It was on the Bloomberg, also at Bloomberg.com, about the property tech startups that buys homes on behalf of renters and helps them become owners. Well, it hit a $2 billion valuation thanks to a recent round of equity financing led by Tiger Global Management and Caffeinated Capital. Let's find out a little bit more about this startup. We welcome Divvy Homes CEO Adina Hefetz. She joins us on the phone in San Francisco. So nice to have you here on Bloomberg. How are you?
I'm good. Thank you for having me here, Carol.
Well, it's great to have you here because I think one of the things that we've talked about a lot over the last year and a half, especially with all the inequities that are out there, is the lack of opportunities for many sectors of our population to be able to buy a home. And it's kind of this vicious cycle that prevents them from doing it. So, Adina, talk to us a little bit about what you are doing at Divvy Homes and how it all works.
Sure. So Divvy is just a new way to finance the purchase of a home. What we do is we let our customers pick out a house. We will buy it on their behalf. We then rent it back to them. And with their rental payments, they actually build equity in the property. So we let them build up to 10% ownership in the property over the course of 3 years. They can buy back the property at any time from us by getting a traditional mortgage and rolling their equity, or we can cash them out for the value of their equity in the home. So, Carol, what I really saw was that people aren't being able to access homeownership because mortgages are getting just more strict over time, harder to get. And so we thought might as well provide access through a new form where it's sort of a rent-to-own option.
How long have you guys been doing this?
So we were founded about 4 years ago, but we've been purchasing homes for customers and helping them access homeownership for about 3 years, I want to say.
And how's it going so far? Give us some ideas of a typical scenario and how it works out.
Sure. So it's been really interesting. What we have found is that especially during the COVID period, access to mortgages have actually only gotten more challenging. And so we saw a rapid rise in demand during the COVID time period, and today have thousands of customers who are using us to purchase homes across 16 different markets. What's really interesting is how well people are actually being able to buy back the home. So we're seeing a buyback rate of roughly 40%, which is 10 times the average that most rent-to-own companies have. So most rent-to-own companies are sort of low single digits, and we're almost 10x that amount in terms of buyback rate. What's even more interesting is that our customers have, on average, about $8,200 of savings in their home. And so when you think about the average American, most doesn't have almost anything in savings. I think the average amount of savings for a renter is roughly about $800. So we're right now helping our customers save a lot, which feels really good.
So you're saying they have a rainy day fund of $8,200?
Well, it's invested in their home, so it's invested in
okay.
the equity of their home.
Okay.
So I wouldn't call it a rainy day
Well,
fund.
I'm trying to understand what
appreciating value.
That's what I want to understand. When you say customers have an average of $8,200 in savings on their home, what exactly do you mean by that? Is that equity? Is that what that is?
Yes, exactly. So we don't technically, from a legal perspective, it's not technically called, it's not technically equity. However, what we do is we basically keep a virtual equity account for them. So they contribute savings into an account. We save it for them, and we give them credit for their percent ownership in the house. So let's say we buy a house, Carol, at, let's say $100,000. They put in $10,000 at the beginning of the program. That home appreciates to $120,000. They own 10% of that home, so the $10,000 they originally put in, but they actually, their ownership is 10%. And so the value of that equity is close to $12,000, and they made a $2,000 gain on their equity, and they get the full benefit of that.
So you said about 40%, the buyback rate of people who rent to buy, the buyback rate is 40%. You said that's 10 times some of the other rent-to-own companies. Of the 60% who don't ultimately do it, what happens?
So what's actually interesting is we're seeing a lot of people who, saved up to 10%, but turns out they need just a slightly larger down payment. And so we're seeing a decent percentage of people who actually just stay in the house and they continue to build up equity. So they build up a larger down payment savings. There are some people who also just turn over. We really encourage access to homeownership, but we want someone to be able to actually want to live in the home. So if your neighbor, you don't get along with your neighbor, you don't like the school district and you want to move, we don't make it so that you're stuck in this house. You cash out your equity and you can move on to another location that might work better for you.
Do you think, ultimately you can get to a point where most renters become a homeowner in this process?
That is what our goal is. Like our goal, we're starting out at 40%. Our goal is only to increase that over time. And we've done that through a couple of very specific things. So first, we offer free credit counseling for all of our customers. That's a really important part of our program. Second, we have mortgage partnerships. So we're able to refer customers over to mortgage providers today that helps them actually work through the home buying process. In the future, what we want to do is be able to eventually help issue the mortgage to the customers ourselves, and that's something that we're slowly building towards because this buyback portion and increasing the percentages is quite important to us over time.
All right, so you said in the future you want to help issue the mortgages. Hey, sit tight for a second, Adina. We just have to do a little bit of news on our end, but love to continue this conversation. We are talking with Divvy Homes CEO Adina Heffet. She's on the phone from San Francisco and really just helping home or individuals who have been renting ultimately become a homeowner. So we'll continue in just a moment. You're listening to Bloomberg Business Week on this Friday. I'm Carol Masser, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And you are listening to Bloomberg Business Week on this Friday, August 20th. I'm Carol Masser in our Interactive Brokers studio. We're going to get back to the CEO of Divvy Homes, Adina Hefetz, talking about how they're helping homeowners go from renters to homeowners. So we'll continue that in just a moment. In the meantime, back to what was a busy day on Wall Street. Let's check in with Doug Krisner.
Yeah, positivity in markets today, Carol, as we saw the expiration of August options. Information tech led a move higher in the S&P 500. We picked up about 0.8% today. And we had Dallas Fed Bank President Rob Kaplan telling an online event he is carefully watching for any economic impact from the Delta variant. And as a result, he may need to adjust his views on policy somewhat if the virus were to show a material impact, negative impact on growth. The Dow Industrial Average today was up nearly 0.7%, and in the NASDAQ market, the composite index picked up about 1.2%. We had shares in Moderna jumping 2% today. A study out of the UK indicating vaccines from both Moderna and AstraZeneca may offer longer protection against the virus than the shots from Pfizer-BioNTech. But importantly, this study does focus on infections rather than severe disease. And Deere & Company raised its full fiscal year outlook, surging crop prices clearly boosting demand for new farm equipment. Here's the caveat. Deere saying the supply chain may continue and the challenges that it's presenting well into 2022. Deere shares today losing more than 2%. 10-year Treasury last quoted in New York at a yield of 1.25%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. Still with us is Adina Hefetz. She's Chief Executive Officer of Divvy Homes, with us on the phone from San Francisco. So you mentioned, Adina, the goal is to get, more renters and every renter, if possible, who partake in your program to become a homeowner in this process. Tell me a little bit about, how the traditional financial system, when we talk about it a fair amount here at Bloomberg, they really kind of ignore a big part of the population. How do you deal with things that they might say is important, like bad credit ratings or not a credit history or low income? How do you deal with that?
Sure, yeah. So the mortgage market was created, has been around for a while, but was really put into existence by the GSEs back in 1940. And during that time, they set underwriting requirements. So FICO requirements, what your income had to be, debt to income ratios, and down payment requirements. Rightfully so, those requirements have not changed over the last 100 years. And the reason why is the couple of times since that they've tried to change them slightly. It's led to major issues like the global financial crisis, right? And so I actually really believe that the mortgage market is efficient and should continue to operate as it is operating. And the reason why is if there is someone who is unable to make their mortgage payments and there has to be a foreclosure that happens, foreclosures are extremely expensive and just take a really, really long time, mostly because they're just so heavily regulated. Divvy can take on people who are in a wider credit spectrum than a traditional mortgage. So we go as low as a 550 FICO, although our sweet spot is right around, call it 600 to 700 FICO. We only require 1% to 2% of the home value as a down payment. So our customers generally have on average, call it $2,000 to $6,000 saved up. We require a minimum of $2,000. And because our product is fundamentally a rental product, if the tenant is unable to make a payment, we're able to be a little bit more flexible, try to work through a payment plan. And ultimately, in the worst case scenario, if we do have to go through an eviction, evictions are less costly and take a lot less time, which means that we can take more risk in opening up the aperture for who we offer this product to than a mortgage can take.
Hey, in doing this, what has been a surprise to the upside? What has been a surprise to the downside?
Oh, wow, that's an interesting question. A surprise to the upside has just been, everyone talks about starting a mission-based company, and for me, that has really just gotten better over time. I love waking up every day. I love helping people actually access homeownership. I really believe that it is a major way to grow wealth for the low and middle income Americans. So I think it's actually quite important. To the downside, I would say, building a company is just a bumpy ride. And things like, right now we're having a mass shortage of inventory. Interest rates are kind of very low right now, but kind of jumping all over the place, and we're not sure where they're going to go. You have to be prepared for some of these macro things that impact your business, but maybe are hard to predict at the onset. I never thought I was going to be managing a company through a global pandemic. I've learned more in the last year and a half than I have probably my prior 34 years. And so I think that has made it a really interesting learning experience, but definitely a little bit of a crazier ride than I had expected.
It's like overnight you're now head of a company with a lot of experience because of the pandemic. I mean, we've heard it. We've heard it from CEOs who have been leaders for a long time. There's just things they learned because they had to and pivot quickly. The timelines were just so bizarre during the last year and a half. One thing I wanted to ask you in terms of home ownership, how do you think about things like diversity and inclusion to make sure that you are helping a diverse population?
So what's interesting is that the government actually regulates that you can collect demographic information on an individual. So you can't ask someone what their race is. You can't actually ask them if they have children or not up front in the application. And all these things are really important because those were historically groups that had been discriminated against when it came to rental property. So we don't ask any of that up front. Although I do estimate, just from qualitatively having met a lot of our customers, I think our demographics roughly represent the demographics of whatever area we're in. So I think like someplace in Atlanta that, I don't know the exact number, but is probably, call it 60-ish% of the population is Black. I'd say probably similar numbers a similar percentage of Divvy customers are also Black. We have a lot of families. I'd say that's probably the majority. We don't know up front, but later on, we do make them list out everyone who's in the house just for safety reasons.
Right.
So a lot of families and a pretty diverse customer base, which we're really proud of.
Hey, really quickly, just got about 40 seconds here. I do wonder what the end game is for you guys. Do you find that staying private is a better thing? You just did another funding round. You're now hitting a $2 billion, or you're there at a $2 billion valuation. Is the end game to go public? Or do you need to stay private in order to function in the best way possible?
Well,
and again, just got about 30 seconds.
Yeah, so I'd say, Carol, staying private is always preferable than having to go public. As you know, going public as a company has a lot of legal and compliance requirements.
Right.
However, I do foresee us probably going public within the next 5 years just because of the asset class we're in, the amount of capital that we need to access. The public markets also generally tend to understand real estate businesses super well.
Yeah.
And we've seen a bunch of our prop tech competitors benefit from this. So
Well,
probably on the horizon at some point.
Well, I hope you'll stay in touch and let us know as things progress over the next couple of years. Love to check back with you real soon to see how things are going. Divvy Home CEO Adina Heffitz joining us on the phone in San Francisco. All right, back out to the nation's capital in our 99.1 newsroom in D.C. and Nancy Lyons for World and National News. Hey, Nance.
Hey, Carol. President Biden offered a progress report on what he called one of the largest, most difficult airlifts in history, and he once again reiterated his promise any American who wants to get home will get home.
The president was asked if his promise of evacuation extends to the Afghans who worked with the United States and its allies.
Yes, we're making the same commitment. There's no one more important than bringing American citizens out, but they're equally important almost is all those who helped us. They were translators. They went into battle with us, as well as non-government organizations, women's organizations. We're doing all we can.
The president said if the Taliban needs economic help, it will have to let the evacuations go forward and keep its promises to the Afghan people, including women and girls. In Washington, Irv Chapman, Bloomberg Radio.
Extended unemployment benefits that were put in place during the pandemic are set to expire early next month, despite the recent surge of the coronavirus. Administration officials say President Biden is encouraging states with high jobless rates to use federal aid dollars to extend those benefits after they run out. Bloomberg's
Emily Wilkins says there's little time for Congress to act on any type of extension.
The House is coming back next week, but it's only supposed to be for a week. Senate's not supposed to be back until September. House is then supposed to be out until around mid-September. So if they want to move on this, they need to move quickly if they need to expand it, because there's just not a lot of time.
Wilkins says it could end up being a replay of the eviction ban extension, where lawmakers had no time to act. As for that eviction ban extension, a federal appeals court today ruled it can remain in place. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Our Bloomberg Business Week weekend show features an interview with Laura Murphy. She's former director of the ACLU Legislative Office, and she now runs her own firm, but she talked about her efforts to get companies to confront their role in perpetuating racial disparities. In this snippet from the interview, Laura Murphy explains why corporations have such a bad track record dealing with civil rights issues. Check it out.
I just think there's a tremendous lack of awareness, and it's not necessarily intentional, but I don't think we get very good education generally in civics in terms of rights and liberties and what they mean in this country. And I also think that, so there's a lack of awareness, but I also think it's so commonplace that it doesn't stop you from becoming a billionaire, not having a background and understanding of how policies and practices may exclude certain people based on their race or their religion or their sexual orientation, etc. So it's just a fact of life. And that's why I think corporate civil rights audits are needed, because there are just too many people in positions of power who aren't aware of the laws. And if you ask them, okay, what are my values? Do you value treating people equally and all of that? People will give the right answers, but where the rubber meets the road is in the implementation of those values. So I think a lot of corporations embrace these values, but they don't test their products to make sure that they don't violate the values.
And that was Laura Murphy. She runs her own firm's former director of the ACLU Legislative Office. You can hear more of that interview on our Bloomberg Business Week weekend show on Bloomberg Radio and on our podcast feed at Bloomberg.com. Be sure, too, to check out the Business Week story that was written by our own Naomi Nix about the work that she's doing. She spent, Laura Murphy, that is, a lot of time with Facebook.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we're getting this headline from the Bloomberg terminal that next week's Kansas City Fed Jackson Hole Symposium will be a virtual event. We're going to try to make it kind of a live event in very limited capacity, but apparently there's been a change of heart given what we have seen play out with the Delta variant. That was one reason today that Dallas Fed Bank President Rob Kaplan was saying he's going to watch for any negative economic impact on this front, and he may need to adjust his views on policy somewhat should the virus slow growth materially. But today it was about buying the dip, and information tech stocks led the market higher. The S&P 500 with a gain of 0.8%. We had the Dow up nearly 0.7%, and the Nasdaq Composite ahead by about 1.2%. Deere & Company raised its full-year fiscal outlook, but the company also warned of problems with the supply chain and challenges possibly continuing into 2022. Today's shares in Deere were down by about 2%, and weakness as well in some of the car makers and auto parts suppliers. Ford became the latest vehicle producer to halt production. It's closing the line at its Kansas City assembly plant where the F-150 pickup truck is manufactured. 10-year Treasury last quoted in New York at a yield of 1.25%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thanks so much. Been looking forward to this. Great way to wrap up the day and the week. It's about the coolest car show ever, covered by our coolest car expert here at Bloomberg Pursuit. She's writing about the coolest and best cars at the Pebble Beach Concours d'Elegance. At it and on it is Bloomberg Pursuit's auto columnist, Hannah Elliott, on the phone in L.A. So good to have you here. This is... First of all, I've been lucky enough to just go once, and it kind of blew my socks away. So tell us about this event and who goes. What do you see?
So you're right. It's sort of the most bombastic and spastic car event in the world, where it's kind of like the Super Bowl of cars, where all of the most beautiful and expensive collectible cars in the world converge on this beautiful golf course in Carmel, and people go look at them. And there are these big parties and dinners and auctions that go along during the week. And then the big finale at the end of the week is this big car show called the Concours d'Elegance on the fairway at Pebble Beach Golf Club. And it's actually a competition. They pick a best in show car, and it's just one big celebration of cars. It's really fun.
It is really fun. And I mean, I remember just driving around, and there's I feel like parades of cars as you're moving around. Tell us about, first of all, they didn't do it last year, right?
That's right. This was a really interesting thing. They canceled it last year, of course, because of the coronavirus pandemic. So I was very curious to know how it would feel going back this year. Personally, I had several European executives drop out of interviews because they couldn't come over. And then anecdotally, I heard a lot of other Europeans who said they weren't going to be able to make it. So I was very curious to see how the numbers would be. And Pebble did the organization of Pebble Beach Concours d'Elegance did a great job of extending their footprint so people could do more social distancing, and masks, of course, were required in any buildings and restaurants and that sort of thing inside. So it was a little uncertain going in. We had some automakers say they weren't going to be there and they weren't going to show cars, and then at the last minute they did. They pulled it together. In the end, I would say it was quite a success. Everybody seemed like they were in a good mood. People were happy. Certainly fewer Europeans there, but the people who did attend just seemed to be in a very good mood.
Well, and I'm going to put this out on Twitter for folks, because the pictures alone, Hannah, and I can imagine how many pictures overall that you took. First of all, it does look like it's fairly crowded. There's a lot of people there, but some amazing vehicles from all different eras. Tell us about, though, the best of show.
So the best of show is this big black Art Deco looking car. It's a 1938 Mercedes-Benz 540K, and it's a 3-owner car. This car has quite a provenance, and it's really special, worth millions of dollars. The people who own this
It's actually a couple. This is their third Pebble Beach win, which is a really big deal. They're the Kellers is the couple. They've had a couple other cars, so this is their third win. They know what they're doing, and the whole point of it is to get a car that's really properly restored to be true to the original condition of the car. So when you're talking about a car from 1938, that's a long time ago. It takes quite a lot to restore it to its perfect original condition, and the Kellers did that. And the other cool thing about this is the 9th time a Mercedes has won its Best in Show at Pebble Beach, which ties Bugatti for also winning 9 titles. So it's kind of like a dog show in a way, kind of like Westminster, where you have different breeds that win. Only it's for cars.
I love how you said it. What's interesting, too, and you include this in your story, is tell us about the judging that's involved and what a car must be able to do to be judged.
Yeah, it's really interesting. This is not just about the car looking good. It has to also run. So each of the cars on the lawn on Sundays, during Sunday's event, they have to complete a drive, a set-out drive course, a little rally around town that proves that they are drivable. And then when they are on the lawn, they have to be started so the judges can see and hear them operate. And, some of these cars, literally, you have to turn a crank. So it's really taking us back 100 years or more. But the judging is really specific. These gentlemen and ladies go around in straw hats and navy suits with clipboards, and they have entire lists of things that they're looking for, criteria, to see if these cars are period correct, including turning them on and running them.
Which is
so it's kind of cool to watch.
It is pretty cool to watch. And as you said, in terms of the dress and attire, it was like the Kentucky Derby in some cases.
Yes. I have to admit,
did you wear a hat?
Of course. I did wear a hat, and I really enjoy the people watching as much as the car watching, if not more. Because this is really, especially after a year of not having it, this is really a chance for people to go all out in their attire. We saw lots of sundresses and garden party attire and seersucker and hats and scarves and bags and stilettos and kind of everything in between. It was pretty fun.
There's a wonderful culture to the people who are really into cars and really know them and invest in them and just treasure them. It's such a cool feel. Hey, along with this, right, goes an auction. Is that fair?
Yes, that's accurate. And this year, another strong, healthy sign. The total for the auction sales, for preliminary sales, was $343 million. That was almost 40% higher than 2019.
Wow.
So things are really up. The average price of the car sold was over $400,000, which in 2019 it was closer to $300,000. So everything's up. The sell-through rates were very high, near 80%. The quality of cars was high. The general consensus was if a car is compromised in its history and its pedigree, it will not sell. But if a car is perfect, it will sell for big money.
Well, really, really cool stuff. I can only imagine how much fun you had, and so appreciative of you coming on and talking about it. And I'll put it out on Twitter because it's just a killer story. Be well. So good to hear your voice. Take care of yourself. Hannah Elliott, Bloomberg Pursuit's auto columnist, and be sure to check out too her work in the magazine that's also on Bloomberg.com and on the Bloomberg terminal. Joe Matthew, I don't know if you're exhausted. I am. I'm tongue twisted because it's been quite a week.
Yeah, is it Friday? I'm pretty sure it is. I had to take time to walk back from the White House since we've last spoken, just to clear the mind. But we're going to talk a lot about what we heard today. You and I were talking about it earlier. We're going to be joined by a special guest, Omar Samad, former Afghan ambassador to Canada, which a position he held at the outset of this war. We're going to talk about what's going on now, what future a Taliban government might take.
Yeah, still so many questions and issues to be dealt with, and really some tragic scenes that we've certainly seen throughout the week. Joe Matthew, take care. Have a good show. Host of Sound On. For the whole Bloomberg Business Week team, they're amazing. We couldn't do it without them. Have a good weekend, everyone.